You're muted again.
Shoot!
Shoot!
Shoot! Good morning, all of our wonderful trading friends. Welcome to MyFundedFutures and MyFundedTV. I am Terry Trades, and we have our expert trader, Tom Sabo. Hello.
Good morning. Hello, everybody. Good morning, chat. Special hello, as usual, to Abhishek and Trevor in the chat. Thank you so much for helping us out. And Nate and Magnus and Aaron and everybody at MyFundedTV crew who are listening, and everybody at MyFundedFutures, and of course, you, Terry. Warm welcome. Good morning. How's the day so far?
It is good. Yeah, I caught some green trades this morning. Last night during Globex, I did lose a funded account. And
oh, no.
Yeah, I know. I know.
Please, next time, keep it as a secret.
I am just like you guys.
It happens.
Like you guys. It does. Yeah, but we can talk more about that later. I know Tom and I were discussing pre-show. I'm like, Tom. And
what
Tom was giving me... Yes,
yeah,
Tom was giving me so much good advice, you guys. So I definitely want you guys to hear that. We'll talk about that later in the show.
Oh, we have so many good topics for today. I know we're gonna have such a awesome vibes, but a lot of things to talk about. Yeah, so let's jump into the charts, shall we?
Let's do it.
Let's go. All right, so we have the charts. I actually had a short position just before the stream. My TP was 811, and I'm going to explain what really happened here. So just a quick recap of London. Not much, actually. It's going to be very simple. London session created quite a few 1-minute demand zones, by the way. Down here at 809, 795, and down there to 767. And let's see what else. No other zones. We have an Asia low down there, 709. So yeah, we have quite some good levels. London session wasn't really attempting to go lower. There was a 5-minute supply zone higher with previous day high on the top at 889. So we pushed higher. The only interesting thing, and I didn't even notice that someone from, I think it was Dominic from my chat earlier on the stream noted me that we are having a fair value gap at 995.50 on the micro, a daily fair value gap basically. So I'm gonna switch there in a minute, but we do have a daily sell side imbalance, buy side inefficiency, or we can just call it fair value gap up there, which is like at 25K. I thought that we're gonna go higher to that level, so I took a long position earlier and I closed it at break even because I just didn't like that sharp drop down there. So anyway, we went down there, took out a 1-minute zone, and then slowly, I know many of you guys are trading the so-called unicorn setup, which I know Ash really likes it. I think this is his bread and butter. He really likes this setup. And I think here on the 5-minute, this setup here is that kind of situation. Obviously, this is not my expertise here, but I think this is the so-called unicorn setup. So it seems like it's playing out quite nicely. If I put the fib tool here, and if I just look for the 50% retracement level, I'd say that, hey, look at that. We have a stop loss there. You can have your take profit at this current zone that we just took out. And look at that. What a beautiful trade. This was like a 1.6 risk to reward ratio. Even if you put your stop somewhere above the, not above, but somewhere around the highs of this. This was like a great unicorn setup. So again, I'm not trading this type of setups, but it just proves to me that this is a really, really good approach. And even if you can leave a runner here to go lower than 800, it can still go a lot. So anyways, we took out that level, looking for this one to get down to that 795. But keep in mind that that fair value gap up there could be still kind of, be a draw on liquidity on NQ. So at 9:30, my plan is to look for some more shorts. By the way, I'm looking for this price action to go down to 767 and then lower. I feel like we still have time to rally throughout the week, so I want more drop here on NQ. So let's just look at gold real quick. We took out previous day high, and we're just going higher, getting closer to the magical 5,000 level. I think sooner or later it should be hitting that. Gold is, as always, it's extremely bullish, and I would not be surprised if the market would just push higher. I checked for zones. There's nothing here I like really. Actually, there's one level here on the 5-minute. But it's above the 5K. I'm not sure if we can get there, except if this is going to be a really, really extremely bullish day. Let me just put this here. So there's a supply zone up there, starting at 5,010, and that's a 5-minute level. So anyway, I'm not trading gold right now. I'm not focusing on it. Definitely don't want to take a short on gold. I learned that in the past couple of weeks and months, like it would be, well, it would be extremely risky to take shorts on gold or on silver. But yeah, and a quick look on ES. Well, ES also, I don't have markups on my ES chart yet. I'm not really following ES that much. I'm not really looking for, I know everybody likes to trade with the SMTs, or I just call it divergence, basically. But yeah, maybe there was a divergence here with NQ. I haven't really followed through this, but there are some more levels here in terms of fair value gaps to be repriced on ES. Who knows? I would say, well, this time, there are some, sorry, on the 5-minute, we do have some demand zones lower. So if ES decides to take those levels out, like we have some sell side here at 68.70, we have another level here at 68.61, and then maybe lower, that would be great to see a drop, like maybe, yeah, all the way down to 68.50. That would be awesome. I think ES looks good for shorts as well, and that is why I'm still kind of looking for more drop on NQ, basically. But if it turns around, the plan would be to wait for a possible shift above the 900s, I think. So if we get above that 900-ish level, I would be looking for that 25K level, actually 995. So that level, we have a swing high here, by the way, at 894, but I'm just going to say, like, let's wait for the 900 before we go into buys, and let's look for that fair value gap. But so far, that's all. I'm going to be reactive as usual and maybe scalp it down to these levels. Hopefully it will drop. If not, looking for buys above that level. That's all I have.
Thank you, Tom.
Yeah. You're welcome.
I did see that news did come in this morning. We can quickly go over that. At 8:30 Eastern Standard Time, core durable goods came in month over month. It came higher than expected at 0.9% versus the forecast was 0.3%. Durable goods orders month over month, negative 1.4. The forecast was negative 1.8. Building permits, housing information, both came in stronger than expected at 1.45 million, the building permits versus the forecast was 1.4. Housing starts came in at 1.4, forecast was 1.3. So economy regarding the housing market, it looks very strong. We do have news at 9:15 a.m. Eastern Standard Time. It looks like yellow folder news. Capacity, utilization rate, and also industrial production month over month. So we shall see.
Yeah, this is thank you for the info there. And yes, it is overall, I wouldn't say it's bad news. Everything as far as expected. Yeah, durable goods orders up, and yeah, everything is like the building permits, housing stats are good. So yeah, obviously not heavyweight news here, but we'll see how the market is going to go with this. I'm quite curious. I think, as always, until 9:30. Well, at this point, I'm not really expecting anything to happen at 9:30. Now that we tagged that level down at 809, it's definitely better to wait until 9:30. And I think the first couple of minutes, we could be seeing a spike. If I'm looking for these shorts, I'm expecting a bit of a spike up here on this 5-minute chart to reprice this fair value gap and then go lower. At this point, I'm feeling more bearish than bullish, though. So definitely not looking for longs above that 900 level. We'll see. We'll see.
Okay, interesting. I did see that bond yields were higher, at least this morning. So it'll be interesting if that puts on some sell pressure.
Yeah,
we shall see.
We shall see. We shall see. So, well.
We only have 1 day left of the promo one-time use, bringing down the price of this 25K flex account from $84 down to $49. If you're a new trader with MyFundedFutures, make sure you use code YouTube for the best deals across the board. And so today is the last day. This expires tomorrow. And then also, if you are an existing trader with MyFundedFutures, you also get a special from $84 down to $77 to try out the new 25K flex plan. Tom, have you tried this account yet?
Yes, I have a flex plan. I have a 50K flex plan, not the 25K, sorry. So I'm pretty much wired onto the 50K accounts, and I'm still looking for that 150 pro account, to be honest. So yeah, I do like the pro account. I really do. But like, I'm trying to, refurbish my risk management process, because on the 150K account, I do have to make some things differently. But yeah.
Do share. I'm curious. What does that mean differently?
Well, it's not just about sizing up the positions. Obviously, you need to look for more profits on the evaluation stage as well. But yes, sizing up the positions a little bit. So not just 1 or 2 micros, but like averaging it up to above like 5, maybe 6 micros. For me, it's perfect. And maybe to get through that evaluation stage, maybe I need to extend my risk to reward ratio a little bit more. So I might try to aim for a 1.5 or higher. Usually I tend to stop around the 1-to-1 risk to reward trade, which so the goal is to extend it, but I always, go back to the basics, like a 1-to-1. I do know Ash goes for strictly 1-to-2, which is great because it gives you more, it eases up again the pressure. So the bigger risk reward ratio you go in, the pressure is going to be eased up way better. And of course, with the 1-to-1, you're like almost have that extra stress, like, we need to keep the winners not just at 50% or 51%, but gotta make sure that I win at least 6 or 7 trades out of 10. So that gives you something extra. While on the 1-to-2 risk reward ratio, you can still be profitable with just 35% to like 40% win ratio, and that's good depending on how you manage your stuff. But different type of risk management, different stop management, different risk to reward management. The entry will be the same, the targets would be the same, and that's how I'm thinking about the 150K account.
Thank you for sharing this with us. I know people in chat did say, someone said that they lost a funded account and also some evals, so that is really good information for us. And then also Q Mendez is taking notes daily. Maybe in about 30 after our debate, we can talk more about that. Like just, because what I'm hearing you say is you're kind of looking for different trade setups too. If you're looking for a different like risk reward ratio for the bigger accounts.
Yeah. So I think, for the bigger accounts, maybe I would say I'm looking for for like the same kind of targets in terms of I'm always looking for the demand and supply zones, but maybe I would be leaving on more runners for longer term targets. Like maybe I should be, or I have to be holding positions a little bit longer than usual. But again, it's just, again, it's subjective because everybody trades differently. It could be meaning that maybe more scalping as well, mostly on the evaluation account. And yeah, I think I'm going to be doing more scalping. Obviously, the profit target is bigger there on the 100. What's the profit target? 9K or 8,500? 9K.
Yep.
All right, 9K.
And on this 150K Pro plan, our favorite Big Daddy account, it is still 30% off using code YouTube, and it is 30% off any of the sizes of any of the sizes of the Pro plan. You can see here 30% off. The 50K Pro plan is 30% off, bringing the price down to 158.9. This is the plan. Any of the Pro plans, we can really run up to 100K per trader sim funded, which is why Tom and I both love the Pro accounts.
Oh yeah.
Yeah, so the Rapid account, it is a 90% split. I do want to point this out. I know I kind of forgot about that. I was like, oh, that's right. It is 90% split. These are our daily payout accounts. They're fantastic if you love daily payouts. Speaking of scalping is definitely a strategy to get past that intraday trailing in the sim funded. Would you say with this one?
Yeah, I would say yes. On the evaluation stage, I prefer. I need to. I mean, I'm not a huge fan of scalping, but I just need to acknowledge the fact that if I want to get through the evaluation phase faster, then I just need to make more scalping trades. So that could be a little bit more pressure. With scalping quickly in and out, you can speed up the process on your evaluation account. You got to be careful of what you guys are doing because, right, if you're not controlling the risk, even on the bigger accounts, on the Pro account, for example, it can turn into a backslash, and it's very easy to burn that account with scalping. But on my end, whichever type of evaluation I'm doing, I just put there more scalping trades, and because like I'm more aggressive on the funded account, as I said many times, I'm much more selective. So on the fundeds, I'm not just taking less trades, but I'm also looking for not the scalping trades that much, but I'm looking for mostly those type of trades that I'm comfortable to hold with 1 or 2 micros for like, I don't know, like 30, 50, 100 points of profit target. And I have no problem with holding the position even for hours. So those are the ones that I like on the fundeds. Scalping can get me on tilt, to be honest with you guys. So scalping on the funded can get me on tilt if something turns bad. So it's a little bit dangerous.
Yeah. Yes, I was saying we need Tom Sable's phone number so we can call immediately and say, Tom, help me.
Yeah. So definitely. So if we can reach 70K, I might gonna give a direct phone number, which will be accessible everybody 30 minutes a day.
Oh my gosh, that would be amazing. Okay, you guys heard it. Tom just said once we hit 70K that he will share a phone number where he will be accessible for 30 minutes. It might only be for a week, but
yeah, I mean, I will sit down and well, who knows?
I'm going to hold you to this, Tom. I'm totally going to hold you to this.
I had to say that. All right. Yeah. We can do that.
It is 20% off any of the Rapid accounts. Yeah. So those are our current promos.
Oh, yeah. And of course, I don't know if you mentioned it, but we still have, I think, the welcome promo for the Pro account too. So if you guys are brand new at MyFundedFutures, we want you to try out the Pro account too, because it's not just on the Flex account, but on the Pro account, a 50% welcome bonus for the first month only. It's a great value to grab the Big Daddy account, by the way. If you have an extra, amount of money to spend, I think it's a great buy. It's a great money for it.
You rarely see the 150K Pro accounts go on sale for 50% off. Like whenever we have that special, I'm like, Let me get it.
You need to get one. Yeah,
Yeah,
you need to get one for that
it's a
price.
great deal.
Oh yeah.
Exactly. Oh, I do see a question. Is the Big Daddy 1-day pass? No, it is not, but you can select the 50K Pro account for 1-day pass. There is that free add-on that you can select.
Yeah, so that's an add-on that you need to select, and then you can go with 1 day. Yeah.
You know, with a 2-day pass, to me, it doesn't feel that much different. Like, yes, I do want to pass in 1 day. Believe me, I do. However, 2 days, you just split the profit target in half. If you're that kind of trader where you like to go,
well,
wild.
Yeah, you're right, and I have absolutely no issue with the 2-day pass. On average, like, I'm not even trying to force my evaluation accounts to go through in like 2 or 3 days. I'm perfectly comfortable with, like, I don't know, 2 weeks or 3 weeks or whatever. Sometimes it takes me a month to finally to get that funded account. Sometimes I can make it in like 1 or 2 weeks. It depends. I would say anywhere under 30 days, I was always able to pass those evaluation accounts. So I'm quite comfortable that I should be able to pass it anywhere between like 1 week to 3 weeks in that period. So I'm fine with that. So yeah, I think the 50% consistency is just super easy to go with. So, and I know we all want to get through that evaluation phase, but it's not a marathon, guys. I know you want that funded account because it's Monday, for example, not today, but on Monday you want to get that eval and you want to get a payout by Friday on the Rapid account. I get it, but it's not about that. It's a marathon, all right?
It's a marathon, not a sprint.
Yeah, it's not a sprint. Sorry, it's not a sprint. It's a marathon.
So, it's so much easier said than done, right?
Oh, yeah.
Like, it's so easy to say, oh, I'm just going to take my time. I'm going to spend a month on this eval. And if you're like me, you're like, yes, I know I should do it this way.
Yeah,
but
exactly.
and then we're like, I just want to do it in 2 days. I want to get it over with. I hate evals. A really good friend of mine said, hey, if you hate evals so much, why don't you hang on to your funded accounts longer?
You're right. So easy. Just hang on to your funded.
Exactly. Stay tuned. Tom and I will be discussing later today on how to hang on to your accounts for longer. I know.
Oh, yeah, that's a very important topic. And before we move forward, this is going to be my favorite part of the day because I'm going to check on you guys how we are doing with some numbers here. I know that the market is a little bit slower. We have 85 likes, which is amazing. Thank you so much, everybody. Yesterday it was 75 before the market opened, so we're doing a little bit better. 141 viewers. Thank you so much. The job today is to get to, again, at least 200, 250. Please, we need to keep up with that average. Actually, we need to break the records. I mean, we've seen 400 or 500 likes too, but let's just try to get as close as possible to those high numbers by 10:30. All right, so we want to do that. And of course, as usual, I want to mention all our viewers on X. We do appreciate you guys watching our show on X as well. If you can just hop onto YouTube and smash those likes, please do us a favor. Help with the YouTube algorithm. It's scientifically proven that more likes, more exposure to the channel. Thank you so much.
Yes, thank you, Tom.
You're welcome.
The market is going to open in about 6 minutes. NQ is green by about 65, 66 points.
Yeah. So just another thought here on trading on those evaluation accounts. Like, I also have the same kind of feeling that we don't want to spend too much time on eval. I know how it is.
Yeah.
But let's just put it in a different perspective. Let's assume that you are having a funded account. Okay, so maybe I'm talking to those of you guys who are already having at least one funded account. If you have a funded account which you can trade selectively and carefully, step by step, next to your funded account, even if you have multiple funded accounts, next to your funded account, it's easier to work on your evaluation accounts. Let me give you a much simpler example here. If you don't have a funded account, or let's assume that you lost your only 1 or 2 funded accounts because you had a really bad losing streak or whatever, something bad happened. You lost your funded account and you feel like, okay, you need to start all over. Then that feeling is going to be much stronger. The stress levels are going to be much higher. You feel like, oh my God, I need to do this real fast and I need to get this done by next week or whatever. I think the best thing that you can do, if you already have a funded account, start slowly work on the next evaluation account, parallel to that funded account. And you will see that evaluation account, and you're not going to be forced to that 50% consistency rule anyways. Just start working on that, and you will see how nicely you can pull up those new evals next to your already being traded funded account or funded accounts. It's going to ease up the stress again. It's going to help you a lot. Obviously, if you don't have a funded account, or if you haven't been able to achieve one yet, then the job is simple. You need to take it slow on those evals. Okay, so that's a basic fact. But if you already have one, it's easier to take it slow on the next eval. So just work on it.
That's such great advice, like to help take off pressure. If you have a funded account or multiple funded accounts, if you work on other evals, then it's like you don't feel like, oh, I have to keep adding money to this. Or if you take a loss, you can be like, yeah, it's okay. Let me go and work on this other thing.
Yeah. If you have a bad day on your funded, you still don't have to rage trade on that poor little evaluation account. Like, oh my gosh, I need to do something on the eval. No, you just, switch, move on to eval and try to reassess and, clear your mind and just build the next account. And that's how it goes. That's what I do. It's not 100% guarantee. Nothing is guaranteed in trading, but this was one of the best approach that I experienced and I achieved, for example, last year, this year too, that, okay, I had a bad day on 1 or 2 funded accounts. Okay, that's a red flag. I'm not on the right mindset maybe for funded, but okay, let's sit back, have a sip of coffee and just work on some evaluation accounts. And by the end of the session or the day, you actually will feel better that you did the right thing by just, rotating those accounts and moving slowly. Anyway, just my personal opinion.
Thank you, Tom.
Yeah, so this is how I do.
It's helpful to hear these things all the time too. Oh, there's a form.
There's the form, everybody. Gotta be super quick, everyone. Super, super quick. So, gotta be always quick, 1 or 2 minutes. Make sure to be here until the end of our segment here because winners are going to be announced. If you don't react,
yes,
you might, you might not get the prize. So you gotta be here for the announcement.
Got to be present. And then take MyFundedFutures in chat to claim your prize. Tom, I have such a very important question to ask you.
Oh my gosh. Yes. Yes.
Our debate.
Yes.
Our debate.
Oh, the debate. I thought it's something else. Okay. Yes.
Okay. In 30 seconds, the market will open. We will have our debate session in about 15 minutes. Tom is up 8 rounds. I am up 4 rounds. Vote Terry.
Well, there's still time. Vote Tom, everybody. I mean, Team Tom. Come on.
T-E-R-R-I. Vote Terry.
I told you guys, she was a cheerleader. That's how she has an advantage, but I will do my best. Don't worry. But here we have the market open first. I'm just quite curious how this is gonna start. I think we should be spiking lower to that 7.9. Oh, there you go. Oh my gosh. We spiked lower, took out the zone at 7.95. The next zone is 7.67. If we can close below this zone or somewhere around the zone, I might hop into a scalp. I think it's too late. Okay.
Oh my goodness, that was so fast.
Oh my God. Okay. Oh my God. Okay, that's it. Okay, took out the level. I'm gonna cry. Okay, so yes. At this point, I'm gonna get confused. Like, no problem. We'll come up with something else.
Yes, we will. We have a full overnight gap back to unchanged price. Let's see if ES is doing the same thing. Yep, ES is doing the same thing. YM
Okay.
is, ooh, big red candle on YM here.
Yeah, Asia low 709. I think that's pretty much a valid level. 709 on the micro, 709.25. We see a bounce on the mid level of this 5-minute demand zone here on the 1-minute chart. The 1-minute demand zone got taken out. Everything just got pretty much taken out here. So let's clean up the chart. And the 5-minute demand zone is still down there. Nice little bounce. Okay, let's look for something else. I'm scrolling through all the possible time frames here, and yeah, not much. Interesting that, like yesterday, I said I'm not really looking at the 4-minute chart, but I'm seeing some supply zones higher on the 4-minute. Wow, look at this reversal
Look at
here.
this bounce.
Wow. Okay, that is, I'm not saying it wasn't expected, but let's see, let's measure this one. This was like a 60 points bounce here, and the drop was also like 50 points. So nice start here. Question is, are we gonna stay here? Are we gonna go down? Yeah, and there was no fair value gap, so I can check the chart on the 15-second chart here. Yeah, of course we had some gaps here, but nothing more. So yeah, this is like a no trade level anyways. So this was almost, not saying it was not, but if you were using bracket orders or trying to look for some breakout below the swing low at 807, you could have got some nice points here. But you know, after that, this is like a no trade area. As long as we're going to hover around here, definitely above the zone, this is a no trade zone, no trade level, I would say.
Okay, wait.
Yeah, wait, as usual, wait. And for those of you who are in gold, oh my gosh, the 5K level almost got tagged on gold. Wow, almost up at 5K, and we have that other 5-minute zone. I think we're gonna smash through 5K on gold real soon. I'm not gonna chase it because I just don't feel like this is something I want to do this morning. But gold looks like it might be able to you know, push through that level on the 5K. Yeah, it looks like it want to go through. If anyone feels like you guys want to jump into a long, nice little pullback on gold, let's, you know, just watch for the 5K. That's it. But nothing else. It's a little bit quiet. Terry, are you in a trade?
No, I'm watching this open. Very interesting. The bulls really are pushing back on this first 5-minute candle. We'll see if it closes red or green. Yeah, on the 1-minute chart, it's definitely consolidating on NQ.
Oh yeah. I'm just kind of trying to figure this out. Like, is this gonna go a little bit higher? But as I said, as long as we're gonna stay here in this area, I don't see any reason to take any trade or force anything here. I actually took a very small scalp trade on gold, only with 1 micro. I don't even know if I have it here. Oh yeah, I have it here. So this is just a scalp trade with 1 micro on gold. Let me just go to the 1-minute chart. Maybe I will add 1 more micro to it. I think we can still trade 2 micros. So yeah, why not? If it goes lower on this 1 minute, then maybe I will add to it. Who knows? I really want to see the 5K. Yeah?
The bulls have failed on pushing it this higher. That first 5-minute candle has closed red.
Yeah, nice rejection on the weave up there.
Yeah, I think I might take the 5-minute orb.
5-minute orb. Let's see. 5-minute orb.
Let's see what side it breaks. I'll take the side it breaks. The 5-minute orb breakout trade. It failed yesterday. It's been on a run. So we'll see if it works today.
Oh yeah, definitely. It seems like yeah, I'm kind of praying for my gold trade, although it's just 1 micro, so I don't know why I'm
it's beautiful.
It's just a 1 micro trade, but I mean, it's it's
Gold in 1 micro is a lot, I think.
It is a lot.
It's
I
a
mean,
lot.
this is just a very small distance here, and it should be smashing that 5K. My TP is at 99.8. So I don't know. Let's see.
Oh, it's going.
We just need 1 wick from gold, please. Give us. Actually, I'm ready to give 1 more micro to this. So, you know, we just only live once. You know, let's give 1 more micro. If it goes if it goes lower, I'm gonna give 1 more to it. Who knows?
I
I'm
like
very addicted
it.
to trading. You know.
We are, speaking of that, I did see the poll results. So MyFundedFutures did drop a poll in our chat asking, how many trades do you take in a day? 4 or more? 49% said 4 or more. 20% said max of 3. And then 17% said max of 2, and then only 14% said max of 1. So the majority, 49% of our viewers, traders, are saying 4 or more in a day.
Ooh, wow, that's a
I'm
very
just like you.
very good information, actually. 4 or more. So what that tells me, that you guys in the chat are addicted pretty much to trading and to the charts. You're addicted to pushing the button, right? I knew it.
We love trading.
Yeah.
I was thinking about this the other day, about how there is no right or wrong way to trade as far as your style. Like, for some traders, taking 10 trades a day might be their thing if they're taking scalps or they have lots of accounts, versus someone that trades only like once or twice a week, and that is how they found success. Like, it's so unique and specific. And sometimes I've heard traders like shaming other traders, and I hate that. I really hate that.
I don't like that too. I don't like that too.
Because there's no right or wrong. Making money is the right? Like, how do we make money overall over the long term? That's what's most important. And that's what I love about trading. It's like, show me your P&L. Really?
Oh, yeah.
Like let's you're so awesome. Let me see your P&L. Because like, whether you're a scalper, whether you're an intraday trend trader, maybe you take 1 trade a week, however your style is, whatever fits your personality, like, it's all about making it happen. And I love that. And I just want to encourage everyone, like, to find your own way, right? There's no one path for everyone.
Definitely. It's so different for everyone. I'm so glad you brought this up, because the magic word, as always, that we use is subjective. And it's not just about, like, when we're talking about the P&L, it's like I also got some comments every now and then, like, oh, but you're not able to make any decent money by trading micros, so you should be trading minis or whatever. Like it's, again, like, for some people, some traders, I get it that you need to make like $50,000 a week or a month or whatever, because you think like that is what's going to change your life. But you got to accept the fact that for some traders, if a trader like constantly making, let's just say a number like $1,000 or $2,000 on average per month. So maybe not even every month, but on average, like, imagine how that extra $2,000 from trading, especially from MyFundedFutures, from a simulated prop firm account, imagine how that extra $1,000 or $2,000 on average can help that person's life in a better way. Like, it's so subjective, because some might say like, hey, I'm glad because I'm having a job, I'm having a business. If I can make an extra few $1,000s from trading, from day trading, that's gonna help me a lot with my mortgage, with my car payments, whatever, or with the bills. If you just make money to pay out your utility bills, that's amazing. You're doing better than like 80-90% of other new traders in the market, because this is how it is. So if somebody is making even just a few $100s on average constantly, that's a huge difference from many other traders. And yes, you might say like, oh, but that's nothing. It's, again, it's so different for everybody, different perspectives, different points of view, and you just can't judge someone by that, and anyway, I don't want to go deep into this because I don't want to offend anyone, because I get that we all want to be billionaires from day trading. I get it, but and yeah,
Like in a day. I
in
want
a
it
day,
now.
we all want that, but you just gotta you gotta respect the small things as well. And I learned it on the hard way. It was painful for me, and I was not respecting. I was having false expectations when I started trading. I also wanted to make $10,000 in a week, and I was like, "Yeah, we can do it." I soon realized this is not how it goes, especially when it comes to day trading. But so then finally, when I got my first ever payout, which was $800, and it took me. I just made the calculation earlier in my stream. It was it took me 2 years and 7 months to get the first payout, and it was $806. I told you guys this, and then I started to like rethink the whole situation. Like, oh, how much emotional damage and pain I had to go through until I got to that point, and what are my real expectations in trading, and that's a point where you can build from there. But anyway, this is a little bit deeper psychological, mental topic, but we will talk about this too. Yeah.
Yes, I love it. It's so important, that psychology piece, which you've shared with us. You're like, yeah, it's so important that we talk about the psychology component of it. And I was listening to your stream this morning, Tom, and I think one of your viewers said that they passed evals and no problem, but and then they get into a funded account, and then they have a hard time. And so there's that whole psychology behind if you're in a funded account, and I heard you say, hey, you can do it, because like if you can pass a challenge account, an eval, and you make $3,000 in it, and then so you can do it. So what's happening in that funded account? Like what are you doing differently? Yeah, very interesting.
And that's a great thing. I was actually happy for that question, because I think we have many traders, maybe amongst you guys in the chat, like you might be feeling like you can pass those evals every now and then. You're passing those evaluation accounts, but something is going sideways on the funded account. Now, rest assured, you're doing something good. You're doing something great on that eval. And obviously, it can be so many different ways how to go through those evals, but you're doing something good. And on the funded account, you have to tone down maybe the risk. You have to step back a little bit and take it slower. The good news is you just have to do some fine tuning. So if you're already feeling comfortable passing evaluation accounts, because you will pass that evaluation account, that is amazing. That is a huge stepstone there. That is something that you only need to fine tune. That, okay, like what is going off on the funded account? It's always emotions. It's always you. It's always, and emotions is going to be ending up in bad risk management. So once you realize what you're doing wrong, you know what you're looking for. You know the levels. You know how to achieve that. I don't know, $3,000, $9,000, whatever account you go with. You just have to do some fine tune there, right?
I need to hear this every day. Thank you, Tom. I am in a long, I got tagged in on the orb, and my TP is at 879.
I actually felt it, like I think Terry is in a trade. I think she's in a trade. No, I was watching the 5 minute too. I was watching the 5 minute here, and I was like, okay, I think this is something that you would be looking for. So yeah, we're moving higher, repricing the 5 minute fair value gap here. Once we get, what the heck just happened here? So no problem, it's good, it's good. Once we could get a close higher than 871, let's see, 871, that would be helping you a lot in this trade. Actually, after I talked about this earlier, after taking out these zones, and yeah, we still left the Asia low, but it's not mandatory to go for that Asia low at this point. The zones have been taken out. There's like practically we took 90% of liquidity throughout London session and a little bit from Asia there. So I would say now is actually a perfect time to focus a little bit more on that fair value gap up there at 25K. So, you know, I'm liking this. I'm liking what I see. I like the rejection, or actually in this case, the bounce. And I want to see it go up there first. You know, if you want to leave a runner, I would take a partial at 921 up there on that swing high. It's looking real good.
I only have one micro. I put one micro
problem.
on. Yeah, maybe tomorrow I'll try 2 micros, and then we can let one run. Oh, here we go. Almost there. 879 is my TP.
879. You will get it. You will get it's already there, right? Almost
Yay!
there. Let's go. W for Terry.
Thank you.
We need to decide our debate topic, you know.
Yes, it is time for the debate.
Yeah, we need to come up with a good topic here. So which one it will be? Should I choose from the list? Let me
yes, you choose, Tom.
Oh my gosh. Okay.
You're in the lead. Up by 4. Everyone vote Terry. Quick, I have to ask all my trading friends to vote for me. 1 second.
Okay. There is a you're already working on you're manipulating the viewers.
No,
you are doing it.
It's called
you are.
Campaigning. It's called campaigning.
Campaigning, right? Okay. I'm gonna note this down. Campaigning, everybody. So I do have an interesting topic, by the way. Trading fewer markets improves results. I don't think we talked about this earlier. Like, yes or no? Trading fewer markets improves results. Yes or no? What do you think about that?
I do like it. I believe we did debate something similar to that.
Okay,
yes.
All right.
We because I remember discussing about like looking at other markets for confluence.
Okay, no problem. No problem. I'm still looking for something. I'm looking at, we have so many great topics here. Yeah, I already know which one we talked about.
Okay, I'm rounding up all of my trading friends.
Execution speed matters more than analysis. There's a good one, but
execution speed is
matters more than analysis. It's kind of an interesting. I don't know.
I think that is interesting. That's very interesting because that would imply that you're actively managing your trades versus
Something
like
that.
a set bracket, basically.
Multiple funded accounts increase or reducing the edge. Also very interesting. You know.
Very interesting. Okay. At youtube.com/@MyFundedFutures prop firm. MyFundedFutures prop.
Revenge trading. How about it? I think we talked about revenge trading. Like it is definitely bad, right? So it would be hard to say that it's good, but yeah, I think we talked about that.
How often do you revenge trade, Tom?
All the time? No. Not really.
It's a very personal question. I just went there, you guys. I'm like, Tom, how often do you revenge trade?
Yeah, I do revenge trade more times than I like to. But like, we can talk about that. Like, is revenge trading sometimes necessary? Yes or not? You know, that's also interesting. Revenge trading sometimes is necessary? Yes or not? I don't know. Just an idea. But
who has revenge traded? I know I have. I think I kind of did it a little bit last night, this morning. I'm like trying to make a lot of money in evals.
There's another one. Volume profile is overhyped. Yes or no?
Whoa. I don't know. That might offend some viewers.
That might offend some traders. Yeah. Okay. Funded accounts hurt trader development. Ooh, that could be a hot one too. I'm choosing the best of the best.
Which one is it, Tom?
Funded accounts hurt trader development.
Funded accounts hurt trader development.
I already know my answer, but yeah. Okay. We're stuck in this in this topic?
It's because we both want to win.
I know. Honestly, guys, I'm
Tiger
looking for
up
something that I can
four.
easily win.
Four.
I'm looking for something that I can easily win. This is why I'm actually scrolling through all these topics.
What would be a good one?
New traders are gamblers. Yes or no?
Oh.
You see, we can't decide. We can't. New traders are gamblers.
I
yes
know,
or
I know,
no?
Tom. How about you just say, Terry, you won the debate?
I can't do that. I'm sorry. This is just not gonna happen. So, trading is more art than science. A bit of it sketchy. Trade the chart or trade the context. Okay, that's good. Trade the chart or trade the context. How about that?
Okay, sounds good. I will
All
take
right.
the side of trade the chart. Yes.
Okay. All right.
Yes.
Thank you for choosing that.
Okay. And I will go first.
So you want to go first? Are you sure about that? All right, sure. Yeah, you can go with that. So
Tom,
okay.
I feel like Tom is like trying to trick me.
It's final. Let's start. Let's go, Terry.
Let's go. Okay, so I am debating the side that you should trade the chart and not context. And the number one reason is because whatever is actually happening, whatever the context may be, it will show up in the chart 1000%. And not only that, but here's the thing, like let's say some tweet comes out that is super bullish or should be bullish. So that's the context, right? And then the market is selling off. So what's more important? The chart. The chart is always more important. In the end of the day, this is what we're trading. We are trading the price movements, the market participants, how they're pricing in and how they're determining like what it should be priced. It shows up in the chart. So to go back to that example, like a very positive bullish tweet comes out and the market is tanking. If you just go in and you buy, you are going to get ran over like being squished by a giant steamroller train.
Wow. Okay.
I've been there. Don't do it. Don't do it.
Okay.
If the chart is telling us we should be selling, then we should be selling and we shouldn't be fighting the chart. The charts will always tell us when it's time. If we're looking for a bullish move, the charts will tell us because the price is reflected there. And if you ignore the chart, that's when we all get in trouble, right? That's when we tend to blow accounts. Like we're sitting there hoping, praying, please turn around.
What a voice. Okay. What a scream.
So don't do that. Don't do that. This is why trading the chart is more important than the context. Context, Tom will tell you that context is very important. You have to know the context. It will help you in your trading. This is true. However, in the end of the day, it's the chart. That is what we're trading. That is what determines our entry and our exits. And those are my opinions. Vote Terry. Thank you so much, guys.
All right, that was good. I give you some points there. Yeah, fair points. Thank you so much, Terry. So let's get to the context part of this. And actually, Terry is saying, yeah, trade the chart. But how do you determine which setup are you going to trade on the chart, right? So how do you determine? You need the context, right? So let's just go with a simple example. Last year, everybody remembers the trade wars, President Trump was, tweeting everything out about new tariffs, putting tariffs on EU, whatever. Like the markets were really treating that harshly. Like, the market were dropping like 1,000 points a day or in a session. The thing is, as we talked about tweets and geopolitical things and things that are moving the market in the big picture, like obviously, if you have something like that, that context is going to tell you definitely that the market is going to tank all the way down. And that context is going to give the final decision. Like, yes, you're watching the chart and yes, you're going to trade, but then you will know like, okay, the context is definitely going to be bearish because this and this tweet came out and is definitely not good news. So yeah, you can watch the charts all day, but you can make sure that you're not going to take a bullish trade on that tweet, or you're not going to take a bullish trade on those kind of news when it's clear that the market is tanking. So the context is going to give you the overall right direction, because you can try to catch a falling knife or vice versa, but by just looking at the chart, because yeah, you're looking at the chart, you're waiting for the nice short entry, or you're maybe trying to wait for a reversal, and it could be a reversal. Even on those days when the market is dropping like 1,000 points, there could be some small time periods when there is a structure and you're like, okay, wow, okay, this is what I was waiting for, let's go long. No, because the market is super dangerous, because there's a trade war, there's some tariffs, whatever. I am not going to take a long position, even if my chart is telling me like, okay, here's a possible long setup. No, you know the context, and yes, you're watching the chart, but you should not be taking the opposite direction what the context is telling you. There are some occasions where you can scalp here and there. Super risky, by the way. Only advisable, not an advice, but only for most experienced traders or more experienced traders. But without understanding what is going on, I'm not saying to be a super genius in fundamentals, but looking at the chart is a great thing. Even you can do some higher time frame analysis. But if something happens, in the world, political or economical, something bad, for God's sake, or something, hopefully not, but if you're not take that into accounting, then you can look at the charts all the way you want, and you can look all the entries. If it shows you the opposite entry, there's most likely you're going to be having some losses there. So try to understand what's happening in the big picture, because just looking at the chart, ignoring the context, especially on those days, is going to get you into a big trouble. So yeah, that's my argument. Thank you so much.
Good job, Tom.
Yeah.
Vote for Terry.
Of course, vote for me, everybody. Guys, we need to secure this, all right? We need to secure it. I mean, I can't stress you guys enough that we need to secure it. Guys, I'm putting myself on the line for Luke for the extra giveaway. No, that's I
will too.
That's unfair. Okay, now she's doing that too. So I'm gonna make sure that we're gonna get some extra giveaways.
Tom is down, or Tom is up 8 rounds. We are up only 4. We need 4 more to catch up to Tom. We can do it, you guys. I know we can. We can battle Tom. Let's do it. Vote Terry. Okay, MyFundedFutures did drop the poll.
Oh, there's a poll. Okay. Guys, by the way, we are approaching 25K. This is a very, very strong push here. I'm actually a little bit tempted to take a trade. Yeah, FOMO. Yeah, FOMO is real. Obviously, it's real. I think we just went higher. No, not yet, but we should be pushing higher than this earlier high here at 963. I'm actually very, 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 very tempted to take a very, very small trade here. So
yeah, I like it. Looking for continuation. So the low overnight is 702. The high so far is 962. So about 262 point range. I like it. Yeah, I think I'll be looking for a long too. I'll take this trade with you for sure. I like it.
Yeah.
But it's so Tom, where did we enter? Are you already in?
I just entered. I entered just now. I had to enter one single micro because I'm a chicken. Pop, I'm a chicken. But the thing is, yeah, my risk to reward. So my stop loss is going to be way down. I'm going to leave this trade quite a bit of a room to run. I think I'm going to risk about a little bit more than $100 on this. So this particular account is having $110 in profit. So I'm going to give that profit back. I'm willing to give that profit back if this trade fails. Let me just put it out on my screen. So no problem with that. and this is my trade, one single micro. The idea behind the whole thing is that we should be getting that fair value gap up there at 995. So yeah,
995. Ooh,
yeah,
okay.
yeah.
Okay, I have to get in.
You have to get, so yeah, 950-ish area here. I have to calculate some stops here. Where should I put? So 905. My stop is going to be somewhere down at 900 and I don't know, 900 and 4, and I'm going to be looking for 993.50. It's not the perfect risk reward ratio, but that's what I'm looking for. I want to see that fair value gap being taken on the daily. So if we take a pullback here, I'm fine. I'm okay. I'm just going to cry later after the show, so I'm fine. No problem.
Crying is good for us. It lets out
good.
emotions.
Yeah, by the way,
I'm
just
in
an
love
honest...
now, Tom, with one micro.
Yeah. Oh, let's go. Hard. So just an honest question from you guys, and let us know. Have you ever cried? It's not a shame to admit it. Have you ever cried because of trading? You know, did trading ever make you cry because of, whatever, a blown up funded account or multiple funded accounts, whatever? I mean, it's not a shame. I did cry.
Type in one.
Yeah, type in one.
I did.
I did. It was a terrible moment in my life, by the way. I did sit down on the couch and I blew up. I don't know. I don't even want to remember it. It was back in the days when I was working months and months to get my CFD funded account. And I blew it up in a few days, and I sat down on the couch and tears started to, I just couldn't hold myself. It was terrible. It was terrible.
Yeah, I've definitely cried too, Tom. I know. I posted on my X account like this. Someone had posted a picture of someone crying, and I retweeted it, and I wrote like, "Bro, are you even a real trader if you haven't cried from trading?"
Yeah. Oh, yeah. I think I saw that. That's why I got to my mind. Yeah.
Yeah, I think almost everyone has been humbled, brought down to our knees, crying from trading. Yeah, it's a tough. This is a very tough career path. And if you're a trader, you're trading, you are so tough, because I think the hardest thing is it's not what happens to us, it's how we recover. It's bouncing back, right? Like that's the most important thing. Everyone is humbled by the market. It doesn't matter who you are. And if you haven't been humbled yet, you will. I hate to break it to you, but you will.
Yeah, it happens. There's not much you can do. It's kind of, I have to add to that thing that I was in a very difficult time of my life when that happened. That was back in 2022, I think, or something like that. 2020, end of 21. It was a very difficult time for me, and I know I put in a lot of work, and I finally thought that, okay, finally I can make it. And I think I was really expecting more, and it hit me hard. I was in a difficult financial spot. I was in a difficult emotional spot there, and when I blew up that funded account, I was like, man, I can't believe it. It was very bad.
Yeah. It hurts. And we recover. We recover.
Yeah. So we're going higher. My TP is at 93.50. Hopefully we can get it. I think I can get like an extra $90 or something like that for the previous profit. So that would be good. That would be like a $200 for a day on that particular account. Yeah, we just smashed it. Let's go.
I took my TP too.
Let's go.
What a great call out, Tom. I'm so glad. I was like you went in the trade. I was like, ooh, I think I would do this trade too.
I know, right? So, and there's 25K, should have held for 25K. So we tagged that fair value gap up there. So I wish everything would be so simple like this.
What a beautiful trade. It's just gone vertical.
Oh yeah, it definitely is. Like, so again, this particular account is up, hold on, $194. And just to give you a sneak peek, today I made $500 65 on one of my accounts. This currently is at 194, and I had another one 189. So these accounts were not copy traded. All these profits were made with 1 or 2 micros rotating the account, but like 500, so basically above $1,000 today. I'm fine with that, so I'm definitely glad.
Excellent. What a great day. I love it. Today's a good day.
Yeah, today's absolutely good. Yesterday was good too. This day is good too. So far, the whole week is good. So yeah, I like it. But the problem right now, actually, it's not a problem. Now that we're above the 25K, there is like a fair value gap here to the left on the hourly, which is great, but I really have absolutely no target here. So even if I want to, I just can't jump into a buy position here. So
it is pushing. Exactly. I'm with you. Cannot jump into a buy. Have to wait for another setup.
Yeah. We gotta wait a little bit. We gotta wait. So,
my goodness, look at this, Tom. We're almost up at 20.
An extra 50 points out the window, right? Yeah.
NQ has gone vertical. How does ES look? Yes.
Yeah, ES also doing the same thing. I think. Let me just switch to the hourly chart here as well. So yeah, next fair value gap is next fair value gap is at 6926.50. So that could be the next target. Nothing that I could go for. The same situation on ES. So possible buy side liquidity 69.26. Yeah, that's how far it can go. But on the daily, nothing. 7K is way up there. By the way, if you look at the daily on ES, we're still kind of consolidating. So we're consolidating ever since New Year and practically the whole month of December. So December and January, we're in the same consolidation area. We're back to like the mid-level here. So I'm expecting, looking at the daily, expecting a push higher. So we'll see.
Very interesting. Such a big green candle on the daily chart so far for today.
Yeah, it looks really good. And for those of you who are trading gold, oh, look at that. We actually smashed that 5-minute supply zone. I want to check something on the 1 minute. So yeah, gold actually went higher than 5K. I like the reaction here. So the 5-minute supply zone was somewhere around 5,009.5, and the initial reaction was a bit of a rejection here. That's actually a confirmation for me. Whenever I see these wicks here and these small bearish pin bars, that kind of gives me the confirmation like this was a valid level. It's pushing through, and now this area becomes a possible support. Now for gold, again, the same situation. We have some levels here to the left. I would not be jumping into a long just yet. Better to wait for a pullback. Even the 15-minute looks very, very bullish. But I don't want to call this out yet, but I think the first part of the major move at least has been already done for now, both on gold and NQ. So on NQ, because we're still, we are in the prime hour here, the 10 a.m. session, I like to see a pullback. So the 1 minute, nothing special. 5-minute is going to close in less than a minute. Let me just put a fib tool here. I need to get a swing. Okay, I'm gonna use the 4-minute for this push, the 4-minute chart. So yeah, it would be great to see a pullback down like to the 920s, 930s. That would be great. Yeah, 920s, 930s. So there's a fair value gap down there. That would be great to see a pullback. Maybe if we can get down there, we can still get in another position, but yeah. The problem is that I don't see a zone. If I don't see a zone, I can't do anything.
Okay, we wait.
We wait, exactly. If you don't see your targets, by the way, and that could be also a human error, like we all traders. If you don't see your targets, you know, you don't see your levels, but and you feel a little bit bored about the market, that's when you try to force something that's not even there. You're trying to look for some lower probability setups, maybe even for a scalp trade. You might even go down to the 15-second chart, 30-second chart, whatever. You're trying to force something. If you don't see anything, that's basically your answer not to do anything. Better to wait.
Better to wait. And most of the time we should be waiting, would you say? Unless like your window is just 15 minutes of trading, that's it, your window, then you're probably like in and out quickly. But yeah, for a lot of us who are in front of the charts for quite a while, waiting is part of the game. Tom, it's like one of the hardest parts. And I was going to ask you this question.
Yeah.
How do you know, when it's a A++ setup versus like you should just wait?
A++ setup. Oh my gosh. Yeah. So number one, I need to have a clean level. Without a clean, target, sorry. In my case, it's always the supply and demand zone. So if I don't see a clean level, the whole thing is just useless to force anything, because without the clean target, the whole system is just not going to work out, because I'm just driving blindly. So the thing is, the major thing, have a clean level as target. It can be anything that you like. I said, many times you can use pivot points, you can use swing high, swing low, fair value gaps, you can use order blocks, whatever you like to call them, but you gotta go with something that your brain actually registers and you've seen it happen, like the same pattern. Basically the zones in my case are a certain pattern that I'm looking for. So whenever I open up my chart first time of the day, it's like a reflex on my end. I immediately start looking for zones. The first thing, like, where's the zone? Where's the zone? Okay, I see the first zones. I mark that out on the chart. So that's number one. And the A++, yeah, go on.
Oh, I have a great question regarding what you just said from Linda K4I. She is asking, can you please show us how you draw your supply and demand zones?
Yeah, of course. We can do a brief example. It would be hard to explain everything, in a few minutes, because it would take, actually, I'm preparing a few hours of video footage for all the details. But yeah, let me find you a good example. Let me just find you. We had some examples here, but let me go down to the London session here. Okay, so so this is going to be an interesting example. Okay, let's go with this. So the 5-minute chart, and I'm going to be showing you a demand zone in this case. ICT calls it order blocks. You can call it whatever you want to call it. Anyway, I'm calling it demand zone because I think it's a demand zone. So we need, if you're looking for a demand zone, we need bearish candles, which these it could be a series of candles. It's not just one candle. It can be 2, 3, 5 candles. So it can be more. The thing is, all these the candles has to be bearish. The purpose of this bearish push is that, or bearish drop, the purpose, it seems like you won, Terry, again. W's for Terry.
Thank you everyone for voting.
Let's go. Congratulations. So yeah, congratulations, Terry, again. I told you it's going to be a very, very close month. Yeah.
Okay, so now we're up. Are we really up 5?
Oh yeah.
And Tom is up 8. Oh, we're getting closer.
It's going to be real tough by the end of the month. So yeah, so just to finish up this thought here, like, you need a bearish drop. All these candles needs to be bearish. If you see a bullish candle somewhere along the way here, that's not valid. That's invalid. The purpose of this is to pick up liquidity. So picking up liquidity could be a swing low, which in this case, there was no liquidity sweep. This push here or this drop here was not able to pick this up. Then why is this valid? Because liquidity can be picked up from a single fair value gap as well. In this case, there was a fair value gap on this 5-minute candle. This bullish candle created a fair value gap. So as it pushed lower, it picked up liquidity from that gap. So that's number one. And after that, we need market structure shift. Now, market structure shift is better. I mean, it's only valid. Sorry, I'm way ahead of my thing here. So the bullish candles after the bearish drop here, the bullish candles cannot trade lower than this bearish drop, which means even just the first bullish candle or neither of these candles until the market structure shift cannot trade lower than the lowest wick or level of any of these bearish candles. So this means this bullish candle here did not trade. Actually, let me zoom in a little bit more. This candle did not trade lower than this one. So this is a valid, nice bullish push. Also, until we reach the market structure shift, there cannot be bearish candles along the way. If you see a bearish candle, for example, this pin bar, which looks like a bearish pin bar, but it's not because it's a bullish close. If this would be a bearish candle, then this whole thing is not valid. This is not a zone, but this is a bullish one. So there cannot be bearish candles. And we need a structure shift here. So there was one market structure shift here, which is a bullish one. We have multiple ones, by the way. The more you have, it's better. There's another one. Another bullish market structure shift, and we have another one up there to the left. Look at that, another bullish market structure shift. And how many we have? We have, okay, that's all we have. We have, actually one is more than enough, but we have 1, 2, 3 bullish market structure shift, and all is bullish candles. So this is a very important criteria. Now the zone starts not from the first, not from the upper wick or the highest point of the first bearish candle. It starts from the opening of the first bearish candle, and the low point of the zone is actually the lowest point in this case, including the wick as well. So the opening of this candle was 767.25, and that's why I put this dotted line here. That's where it opens up. So number one criteria, liquidity sweep or liquidity sweep from a fair value gap. It could be a swing low or fair value gap. Doesn't matter which one. It can be both as well. Doesn't matter. Bearish candles cannot be traded lower by any. So we cannot see any bullish candles lower than this drop here. The push has to be bullish all the way, at least up until the first market structure shift. And that's how the zone is being created. There's a lot more to this because I can categorize these zones, by the way, and that's what I'm working on right now. There are higher probability zones and lower probability zones, but this is a very good example. Also, if we have a structure shift, just for example, if we have only a wick here, so if this candle would be only a wick, but the body is not closing higher, technically that's also a structure shift, but it's a low probability zone. So that is one way to categorize it. If we have only a wick and we have some bearish candles here, that's still valid, but that will be a low probability zone. But we have up close candles, so I like it. This is really looking good. So that's a good one. There's another one here, by the way. Look at that. A bearish candle, just one single tiny weeny little bearish candle here. It looks like a bullish pin bar, but what it did, look at that. It actually swept liquidity here. It actually went down, poked into that fair value gap, and then pushed higher. So you might be asking, okay, but where is the market structure shift? There's the market structure shift, a small one, just a tiny one, a tiny market structure, because this is a swing high on the lower time frames. This candle here, we can actually go down to the 1 minute, but doesn't matter. This is a swing high. There's a market. It's actually not a shift. It's a continuation. It doesn't have to be a reversal. It's a continuation in this case. So we have number one, we have the liquidity sweep, we have the market structure continuation. This makes this candle here, sorry, this 5-minute single candle a zone. Okay, so that's also a zone, and I can actually go down to the 1 minute for just one final example because it's right here. I saw that. I do actually know that in the London session, somebody was pointing this out, and it was a very good point. These two levels, these are markups left from the London stream. This bearish candle, the same. Liquidity sweep here. Okay. Market structure shift here. Bullish push, beautiful. This candle is a zone. Now we have more candles, bearish candles. You might ask, okay, but where is the liquidity sweep? You have to zoom in on the 1 minute for this. But look at that. We have a fair value gap here. So there's a swing low sweep, and this is a fair value gap sweep. And again, what did we see here? A market structure continuation in this case. Now, this is only a wick. I just mentioned it. This is a lower probability zone. And this is why I was focusing on that lower level right down there, the 767. This up here on the 1 minute, this is a lower probability level. But this one down here is a little bit higher probability, but this is also valid. So there's many ways, I mean, not many ways, but you can categorize it. And again, I try to explain it as short as possible, but I could talk about this for hours, and I'm sorry I took away the time because of this. But I think it's quite interesting, and I hope you guys, some of you guys at least, like this kind of approach. I think these zones could be very important, and especially look at the 767 level here. What a nice reaction here from earlier. So anyway, it looks good.
Thank you, Tom. That was really helpful.
Welcome. I'm glad you liked it. So yeah, I wanted to talk about this anyway the other week, but we will talk about it more next time. Yeah.
Yes.
So what is happening? We're pushing higher, right?
We are pushing higher. Exactly. NQ is green by 1.18%. ES is also green by about 0.80%, trading at the highs also. And YM is trading towards the high of day at 0.61%. All indexes are green. What do you think? Maybe.
Well, don't jump into a short position, right? I know I lost the debate, but this is what I'm talking about. Like, the context is bullish, so obviously if you go down to the 1 minute chart, and you might say, like, you know, I'm still arguing on my side of the debate, but you're still, you're like, oh, let's jump into a short here. You're not jumping into short. Oh, let's jump in here. No, you're not doing it, because you know the market is above 25k. It's bullish. It's pushing higher. Anyway, I'm just joking here. The thing is, you know, as I said this before, like, we're above the 25k, it would be a little bit dangerous to look for shorts here. It's almost like the falling knife situation on the opposite side. It feels like it wants to push higher for sure. It has to be some sort of a structure, and not just on the 1 minute chart. I like to see a structure on the 5 minute maybe, or at least on the 3 minute chart to be shifted to the downside. But even if we shift that on my end, actually, I don't. Hold on. Speaking of structure and levels, so just one more final example here, really quick one. These two candles here, this bearish candle at on the 1 minute chart, 10 minutes after 10 and 10:11. So 10:10 and 10:11. What are these? Oops, this is a demand zone, by the way. So this is a demand zone on the 1 minute. So let me just put this here. 1 minute demand zone. Why? Picked up liquidity from this fair value gap, shifted the market structure up here. So we do have a level. Now, these are the kind of levels that sometimes I try to scalp. So the level is at The level is at 25,021. Now, what can you do here? Like, how can you scalp this? One way to scalp it is, which I'm not saying you should do, is you might go to the 15-second or 1-minute chart. So it's a little bit dangerous. The distance is like 30 points. So the range is good, but do you really want to justify this? If we're, I feel like we should be going down to that 21 level to tag this zone and then maybe move higher. What gives me confidence in this one is that we're still above 25k, and why not just go down to pick up some more orders? And by the way, speaking of these zones, now this is only my concept. It's not like an ICT concept or whatever, but I feel like this is somewhat why they are called order blocks as well, or demand zones. Like, these zones should be, or theoretically speaking, should be holding orders or pending orders. So this is why we're seeing these bounces and rejections when the price tags down into these zones, because I assume, and this is why I'm happy when I see an immediate bounce. So if the price would just go down there right now, maybe just tag it with just one single tick is enough if there is enough orders there, and we see an immediate bounce, it kind of confirms me that there was some orders down there. So anyway, that's just one approach, but yeah, you can do it so many ways. But
okay. We shall
even
see.
Even if you're not looking for this to go down to 21, you can keep an eye on it and maybe look for the reaction here at 25,021.
Okay. There is an inside bar, Tom, not this candle, but the one before. I did hop in short off the inside bar. I know you're like, don't take a short.
No. 5-minute chart. Yeah.
Off the 5-minute. Yeah.
Okay. No. Actually,
it might fail. It might fail.
No. Actually, I do like the short idea. Now this is when your intuition comes into play as well. If you want to scalp a level like so close to this, especially after a strong move that we had, because after a strong move like this, you always got to be a little bit cautious and careful about the shorts after a bullish push like this.
I know it's not looking so good. It looks like it might fail here.
No, you know what? It can still go down. Maybe it's just going to sweep the high and then immediately turns down. I've seen it many times. But again, I'm not saying that just to go back to the debate, but looking at the context, like what is the market really doing, or what happened so far, in the past couple of hours or in the past hour? We've seen a very strong push here. Obviously, the market is like, quote unquote, exhausted here a little bit. It feels like it just wants to accumulate some more positions and then move higher. So like in this exhaustion phase here, we could see some so-called pullbacks. So that's why I would be looking at the 21 level. So your short position could still be actually good, but like looking for a lower target would not be an option for me. But like looking for 20 or 30 points of a short,
like a scalp.
Yeah, something like that. That could be still good. This whole picture tells me that this is very bullish still.
It's so bullish. So now I'm feeling like, oh, this was not a good short inside bar to take. But
it's not over yet.
It's not over yet. You're right.
Yeah, it's not over until it's not over. I always say
it's not over. The context important. This is true. However, you do have to trade the charts.
Guys, I got so carried away with this educational stuff. I haven't tortured you enough with the likes, because I'm seeing 170 likes, and we have 1 or 2 minutes. Today we have Afiz, I think we have him today with us, and before he comes onto the stage, we want to see a couple of more likes. So everybody, please make sure to smash those likes.
Yes, let's go. We have Afiz in about 2 minutes.
Yes. So
Tom,
Terry.
how do you feel that I won the debate today?
I'm not afraid. I'm not afraid. You know why? Because I know that somewhere in chat I have those viewers who still loves me, who still love me and still likes me, and they will help me out at the end, and they will vote for me, and finally I can, get that victory. So guys, please don't give up on me. I know Terry, she's much cuter, she's nicer, and she's, we like her voice very much, and she's just so kind, but I need this win. All right. I need to win by the end of the month.
We're slowly catching up to Tom. We still have a chance, you guys. Okay, let me look at the calendar here. We have Thursday, Friday, and then next week, and that's it. And we are behind quite a few rounds, but we are catching up. I think it might be close. It might be a close one.
Yeah, it will be a close one. I know. Yeah. So we had a great time, right, Terry? And
yes!
I think our time is technically up. So any last thoughts here?
No, you guys are so awesome. Thank you so much for a wonderful, wonderful Wednesday. I can't wait to come back tomorrow morning to spend the morning with all of you.
Oh, yeah, that's going to be amazing. So thank you so much, everyone. This was absolutely great. So stay tuned for Rafiz. Lots of educational stuff, lots of value. Can't wait to listen to his segments. So stick around, everybody, and see you guys tomorrow. Cheers, everybody.
Cheers.
Hey, what's up, everyone? Welcome back to my segment. Let's get right into it today, all right? So I haven't taken any trades so far. I was pretty bullish on today's daily candle. First of all, how you guys all doing? I was pretty bullish on today's daily candle, actually. Sorry, bearish at first. Now, what we've seen in the first kind of hour of the market has shifted that development. So I want to pay your eyes to like this chart here, okay? So what you can see is that I was looking, obviously for us to come in and take out these failure swings that we see on the NASDAQ, even the S&P, we have just a lot of low resistance lows in these markets, okay? So I was looking for shorts originally today off of the daily alignment, which I'm going to show you in a second. But pay attention to the fact that we now have swept out this previous weekly low, like this. And if you go to the daily chart, you're going to see how the reaction we're getting from that previous week low looks a little bit like this, okay? So we come in, we sweep out the previous week low, and we were anticipating price to maybe deliver, right, off of this gap that we see on the daily chart that I have marked out with this line, potentially towards these lows. However, as you can see, price here has failed to manipulate inside of this gap, right? So what we saw this morning was price expanded higher. And I have some of that alignment right here, okay? So we reversed this weekly range here. I was looking for shorts. Like I think most people were looking for shorts probably. And then once we formed this new invalidation, right? You can see in here, this 4-hour chart gave us this morning's price action, which is quite interesting. And that's rapidly shifting my bias actually to looking for longs now, okay? Now we're pretty high in the range. And as you know, I don't like to trade necessarily near the high of the range. So let's take a look at how this candle forms. We open the market, we have a gap, we trade into this gap, okay? We diverge at this low here with the Dow. And then NASDAQ, you can see finally trades into these highs, right? Expands into these highs. Now, this candle closure here is interesting to us, right? This is our precision swing point. So if we're confirming this candle here, right, as a swing, we can see price trades into a gap, right? Forming divergence. And then we have this up close candle, down close candle. So we're looking to trade 10 a.m., right, as an open, low, high close candle. And as you can see, at 10 a.m., I can probably throw an indicator. At 10 a.m., price immediately opens high. So this is going to be creating actively a new invalidation. This invalidation is going to be a gap, right? So you can see we have this fair value gap in here. That looks like this. Now I'm watching to see what price does inside of this gap, right? As this new 90-minute candle opens. So if we're going to continue to expand here, I anticipate that this candle is going to form some sort of open low, high close, right? We have failure swings up at the 90-minute highs. So we're watching this development, right? In terms of the daily range, like we look at the daily chart, it's kind of hard for us to expect that we're going to get all the way up here in one day, which is why trading into this high was the ideal draw on liquidity, right? Up here is quite far away for this daily range. So it's tougher for me to say that we're going to come all the way up here to that daily high. However, right, it doesn't mean that we can't look for some directional trades, with that bias in mind. So I haven't taken anything yet. I'm more so watching this 1030 candle as it opens to see if we trade and respect this gap, right? How's your guys' day going so far? Trading day. You guys taking any trades? Try to pull the chat. Yeah, we had a big wick, which is why I didn't personally trade this 4-hour reversal, right? When we have large wicks, I don't trade the reversals. I also didn't have the framework to get involved in the longs, and that was because I didn't see a 2-stage cracking correlation, which you guys know from my model I require. So yeah, I missed the longs today for sure. However, there is still opportunity, right, within continuation. So you took a small scalp, you're waiting for a better entry, green, good to hear. Wanted shorts and watching all the way long. Yeah, most people wanted shorts actually, 100%. I think most people came into the day actually looking for shorts, like as did I. But you can see like along the open, we're gonna see some forms of strike switching, and like this in here, like this 4-hour chart, it's hard to fade this candle, right? As it prints, you're gonna see we open low and we expand away. So for me, right, it's quite bullish, right? So at this point in time, because we've come into this previous day high, I'm expecting more of a retracement of price before we look for anything higher. Right, we might end up taking out this high here, forming some sort of divergence, and then trading back in the range. That'd be ideal. You could look for some sort of it'd be more like playing a retracement or a scalp lower. But that's really the only option I can see at the moment, right? Do you think we're going higher or lower on the ES and NQ? I think after this closure, right? You can see on the higher time frame, after this closure here, it's hard to trade back towards this low. It doesn't, however, mean you can't look for something internal to this range, right? Yeah, we have some gaps, especially in here, that price could trade into. So seeing some sort of manipulation of the external high or something like that could be interesting. Typically speaking, though, you want to be involved if you're bullish. Like today, if you want to trade the daily range, you want to be trading from this reversal to this high. The issue is that for me, there's nothing that fits my model here, right? So we don't confirm this low with anything that I can get on side with. You can see here, it's a really large wick on the higher time frame, and then there is no precision swing point or anything that I can use to trade the 945 open higher. So I just don't trade that. I just missed that one. You wouldn't look for a continuation now. The issue with trading this deep in the range is you're potentially longing the high of day right now, right? So the only asset that I could see taking out like more highs right now is YM taking out this 90-minute high. You can see it closes its candle with a retracement, and then it opens the new candle, right? Potentially as an open low high close candle. This asset I'd like to see off a retracement because we just expanded into a key level, right? This was that daily gap that we talked about. So it's kind of hard to get long up here, guys. right? What we can watch is like this gap and inefficiency, and we can maybe confirm a swing inside of here with the precision swing point. And if we confirm a precision swing point with some sort of gap, right, then we can look to trade towards this side potentially. But again, we have to wait, until this candle closes or is about to close, and give us its, divergence and delivery. At this point in the range, though, you got to be very patient. What I don't like to see on the daily chart necessarily, guys, is like what I haven't been liking, right, on the indices market is like daily consolidation we're in. I'm really looking forward to seeing us manipulate this, like these external lows, right? You can see like we have a lot of like external lows in here that I want to see market trade into, but we are really failing to take out any of these lows. I mean, you can see we're just generating the higher time frame range. So this is like very choppy price action again. Consolidations are marked by like an inability to expand through lows and highs. So if you just draw out like the range, you're gonna see like this range is really what we're waiting for some sort of external deviation of. And when we're internal to it, it's very choppy. Right, so we take out that previous 90-minute high. Again, there's not much opportunity in here for me to trade this, guys. Where it's very high in the range. This happens in like one candle. The higher time frame draws are up here. We have no divergence, right, with this gap. So again, there's not a sequence I can get behind inside this gap. I would need to see something like this, right, to get involved, which I don't have, right? All assets trade into the gap. So only thing I can confirm this is with a swing point. And then I have to wait for that to close, right, in 3 minutes. So nothing yet. I'm wondering how you guys did today, though. I wonder if you guys took any trades and like what your trades were. Did anyone get long off of like the reversal on Nasdaq at the lows? Did anyone get long here? Like something like this. The issue with me is that there's a really large wick, right? So when we form this reversal, we have a very large wick on this 4 hour, you can see from the open. And because this candle is not confirmed, like this wick is not confirmed with a swing formation with a crack and correlation, if that doesn't make sense, just like that's my model. Because we're not confirming this with like a PSP or something, it's hard for me to trade this wick, right? Now, if we had formed like a 15-minute crack and correlation here, like a PSP, then I could trade this 945 very large wick that looks like this in here. It's just unfortunate that we don't get anything like that. There's no signatures I can get behind here. So I have to wait for 10 a.m. to open. And then 10 a.m. opens high, right? We don't create like any sort of like consolidation. And then a gap to go trade towards this daily high up here. We just open and immediately take that draw out. So there's just not a lot of opportunity in here for me. Use my model. You guys should definitely fill out this form for a chance to win some stuff. Not so good pre-A for you? Yeah, it's about being patient. That 5-minute SSD on Nasdaq, yeah, I mean, it works, right? The only hesitation I had, like, that's one of my students asked me, the only hesitation I had about this 5-minute SSD was just the large wick here, right? Large wick, I want to confirm this wick with a swing formation. And the only swing formation I can confirm it with is the 50-minute chart with no model formation for me. So you see how we have this divergence in the gap? I would need to see something like this. if this was a up close candle, right? If that was an up close candle here, and this was a down close candle, or like this was a down close candle, or we had some sort of SMT between the swings. So for example, price did this and made a lower low down here. Like this wick came in like that. Then I could trade it, right? I could trade this really large wick, but I don't have those signatures, so I can't trade it. So it's like a very mechanical kind of process, right? And you can see this 10 a.m. candle opens high. And because it opens high, I don't want to trade near the range high of this expansion candle up in here. So you can see even for this continuation up in here, it's very, very premium, right? So best to sit out today? Absolutely, yeah. I mean, sometimes you just don't get a trade, right? It doesn't mean you can't look, but it just means that if your model doesn't present itself, you're gonna be handicapping yourself by just trading, right? For the sake of trading, like to get a trading day in, for example. So I like to prefer just waiting for like a specific sequence. You'll see, right? Like one of the peers, it should be frictionless. It should be effortless to push the button. If you ever feel like some sort of uncertainty about pushing the button, it's very likely that you're doing something that's like breaking your rules, right? My pleasure, bro. I'm glad you're enjoying the education. If I don't win now, I will start giving up. Don't give up. Yeah, don't give up. You only lose in trading when you stop. What are you looking for NQ now? I'm looking to see if we can form some new phase of price here. So you can see how the 10 a.m. candle just opens high immediately. Like look at the hourly candle, for example, right? You want to typically avoid trading expansion, right, through old objectives without a new swing formation. So a swing formation looks like a 3 candle pattern, right? Now look at this 10 a.m. candle. There's no good swing formation into or beyond this high. If I go down a time frame, we're gonna see that's not a great swing formation for me. Okay, why? It's a really premium, right, of this 10 a.m. range. First of all, very high up in the range, but also, right, I don't have any sort of crack in correlation or anything to qualify that. I don't have any sort of divergence to qualify that. Notice how on the higher time frame here, with my swing formation, I have that crack in correlation, right? That first stage, and then this is a reversal, so I demand a second stage that looks like this. So now I know I can trade away from this swing formation for the day, but I need a new lower time frame swing formation. And since we've opened this candle at 10 a.m., right, above this key level, first of all, I have to ask myself, is it reasonable that we're gonna go from here to here today? I don't necessarily think that's possible. I mean, it'd be a really large daily candle. If you look at the daily candle, right, to get all the way up to these highs would be exceptionally large. How many points would that be from the low? Like a 3% daily candle, which is like very, very infrequent, right? Majority of candles are not 3%, even very, very large candle. Like that's reaching like the largest type of candle you're gonna see, right? Most candles are much smaller than that. Right? Very large candles are like 2%, 2.5% kind of thing. So this is a really large range to cover. And the problem is there's nothing really else I can target here, right? You look. Like I have this gap. So maybe I can look to get here, but right now there's just no swing formation for me, right? This would be like where I could target, but I can't really trade off of this here. This swing formation here does not have a crack in correlation. And for me, a crack in correlation is required to call that a high probable swing, right? Which is a 3 candle pattern, remember? Again, I'm going to point your attention to here. Why am I able to call this a swing on the higher time frame? Because it has that crack in correlation, right? We diverge at a low. And then we have an opposing delivery state close. That's a swing, right? In this candle so far, I have no swings that I can trade. So I got to wait. Now, what I'd like to see is something like this that we talked about, right? So look at this 90-minute candle. It opens low, right, into some key level. But we don't form a good swing here. So I'm looking at this candle as a range. I'm seeing if all assets manipulate the high of the range. Potentially, we'll see YM fail to manipulate the high of the range. And then we'll see some sort of inside bar closure here, a gap, and then we can trade towards that high. I would rather trade towards an internal high than this external draw, right? Based on how high we are in the range from here to here. This is about halfway. If I show you a range. Yeah. So for me, it's much more strategic to trade towards some sort of internal high than an external high. So I gotta wait for that internal high to be created, right? Right, so I'm looking at like potentially like this candle here. If it closes as a down close candle, this is an up close candle, right? And we see some sort of reversal signature. We can look to trade back into the range, like essentially back into this 10 a.m. open, right? That would be very interesting to me. Now that we've manipulated this high, I'm looking at this range. Like getting back into EQ of the range is right around that 10 a.m. open. So that's kind of what I'm thinking about. Finding a swing point to confirm the high, right? So we have this 90-minute high that we're not manipulating on this asset. So right now I'm forming some sort of divergence that looks like this. Now I need to confirm that, right, with some sort of swing point. Right, so maybe we close this candle, you know, as a down close candle. And then up in here is where you're looking to kind of confirm that idea. And I'd really just be looking for this like 10 a.m. open. Like essentially I'd be looking for like this gap. Kind of the only time you can like trade a retracement though is when we've like expanded, right? So we're capping some sort of range. We've expanded off this low quite aggressively, right? Into some sort of key level. What's that daily gap? And now you're looking to trade some sort of retracement. But it's definitely not like my A+ setup. I don't like trading retracements as much as I like trading, you know, expansions, right? When I say expansions, I mean like in the direction, right, of my like control and liquidity, or where I want to see price go in the daily chart, for example. Right, and for me, it's like it's simpler probably at this point in time, just because I'm so bullish, right, on this daily chart, to not trade counter trend, but instead just wait for a gap, right? Like, look, using that same thesis, just wait for a gap formation and align that with like either this candle, right, or the next candle. Probably the next candle. So the next candle is going to be aligned with a new. The next 90-minute candle is going to be 12, which is also the 6-hour candle opens at 12. So I have two time frames. They're going to have higher time frame opens at this 12 p.m. So look what that looks like. Right? If I have these two time frames that are going to be opening up new candles at 12, that means that this current 6-hour candle is going to be closing as an expansion candle, right, away from this low. The next candle can do something like open, low, high, close, right, at 12. So maybe at 12, we form like a 90-minute gap in here. So I can look for a 90-minute gap that would form in this range. You can see that it's gonna be right in here, right? You can literally see where that would form, like right in here, like that, and then we could trade, you know, away from that. And that would be trading in the direction, right, of this draw. This here would be our draw liquidity. For this daily candle, right? Again, it'd be very difficult to get all the way up here. But like this is reasonable. Oh boy, myself, sorry about that. Oof. I'm getting a bit sick. But in the moment, right, we're looking at this divergence at this current high to potentially see that, you know, cap off the range, and we'll start to retrace potentially. Do I trade Bitcoin? I don't trade Bitcoin, actually. No, I don't trade crypto much. I trade indices, like the index future market is where I predominantly trade, guys. New video when on my YouTube? I'm gonna do a new video at 14,000 subs, so I'm like I think 100 away. So definitely, yeah, definitely we'll be posting a new video shortly. I've been making some of the content for it, so that's coming. Which will be exciting. Yeah, you guys will definitely enjoy that one. So as you can see, right, we're just kind of ripping. Like we're like this logic that I'm trying to convince you of, right, is why I'm staying out of the market, because I don't have any swing point to get involved. Can't do anything here, guys. The market's very one-sided here, right, which is why I also don't want to be shorting it. But I need a swing point. These days can be a little bit tough, right? You just feel like you're not able to get involved, but trust me, I've hurt myself more trying to get positioned here, and then price will do something like this. You guys have all seen it, right? You get involved near here, and then price does something like this, right? Creates like a range, and then you know you're gonna have like 2 p.m. here. That'll expand, right? I've had enough experience to know like this is not where I want to be involved. And if it just goes one side, it just goes one side without me. Been there, done that. Oh yeah, we've all done that. We all do it. But one-sided price legs in the market always induce some FOMO. And every trader, I think every single trader, no matter how long you've been trading, you see like moves like this, and you just want to be involved in this move, right? Every party wants to be involved in that move, but sometimes it's not possible. The most important thing I can always emphasize to you guys on the stream is like you're never gonna see me trade something that's not my model. So like I'm gonna trade my model over everything, over my emotions, right? So like unless there's sequences that I know and trade, have edge, the market can do whatever. The market can do whatever it wants. Like unless I see a sequence that I know and I trade that has edge that I backtested, I can't really do anything. We're still watching this high, right? Like this is interesting because we see YM is quite a bit weaker here. This is a form of strength switching. So you're seeing that YM, which was the asset that reversed here first, is definitely a bit weaker in this range. And NASDAQ is definitely the leading asset. And you can see on the lower time frame, right? NASDAQ is closing through highs and it's much more bullish. Which again is setting up for maybe some sort of sequence in a gap, right? Like I talked about. If YM comes into a gap like this, right? It retraces into this gap here. NASDAQ could leave a pretty large divergence and we can get to this high. So we'd have like a new range, right? And we might have a divergence that looks like this. Okay. So we can essentially see if price wants to do something like this, right? And while YM does something like this, right? Yeah, that would be a really, really high quality sequence for me, like high probability sequence. But it requires us to wait for that now, right? I don't want to be involved in this And also, like, I don't really want to trade this for retracement either. Like, it's possible. You definitely can. Like, you can look to trade realistically towards the low from YM, right? Like, pretty choppy in here. It's like a really nice invalidation, right? You could look to trade something like this. To get to that low. But again, you're just, for me, that'd be just fighting the market direction, right? Even though like retracement's likely, it's be fighting the direction of the market. I would rather wait for that sequence to form, you know, a bullish sequence of some sort, as opposed to trading a bearish one. So you can see we have that SMT forming right in here at this high with the NASDAQ. And you can see that change in the delivery, right? This is a bearish delivery candle, bullish delivery candle. So that's a 2-stage in here. So now you'd expect this new hourly candle to potentially open, right? It'll sweep out this high on NASDAQ, but this candle can trade lower here towards this hourly gap. You see this hourly gap in here from external to internal? Very likely want to see NASDAQ run out this hourly high first. Right, so maybe NASDAQ takes out this hourly high. We see some divergence with that. And then we see YM trade back into the range. Like I said, like this is a really strong invalidation for this because this gap creates that divergence at the high. Right, so you can see this is very high probability retracement. But I would rather see what happens after that. You can see the small opposing wick here supports the idea of this candle potentially trading lower. And you can see that if this gap gets retraced by the YM, you have a very large divergence, right, with price. If NASDAQ doesn't come into this gap, there's a lot of space in between these highs and lows. Right, and a trade idea could look something like this, actually. Towards that low. Especially as NASDAQ runs out this hourly high. That's what you'd be looking for. Right, it's this inversion in the 5-minute. I'm debating whether I want to like take this or just wait. I'd like to see NASDAQ run out that high if I was going to take it. It doesn't have to though. It's not required. It's very, very high probable NASDAQ runs out its previous hourly high though. But this is clearly expanding away from that divergence. So if NASDAQ runs out that high and we get a closure through here, I'm going to short the YM. I'm going to do it with relatively small size because I'm trading counter trend. So I'm going to do is I'm going to take a short here on the YM. I'm going to cover that 15-minute high. See if we get that move lower. I'm going to do it with like very small size though. As you can see, it's kind of fighting the market here. Could just be immediately wrong with that idea. It's going to cover that 15-minute high though, that we diverged at. Realistically, I can only look for some sort of retracement here, guys. I can't trade this higher in the range at this point. So we're either gonna diverge that high and give some sort of reaction lower here, or we're just gonna continue to trade higher, like chopping higher, which is kind of impossible for me to get inside with. Let's cover that high. What I'd like to see is YM offer some sort of retracement here so that we can get long on NASDAQ later. But I think that that's going to be outside the time I look for trades, to be honest. I'm just going to hop off after like my segment here. So like this idea here supports, the divergence at the high, trading into some internal range of liquidity before we eventually, expand back higher. But we'll see. If we just flip this and we go long from here, there's not going to be a sequence for me to get long. I need to see some sort of retracement of this range, guys. And even this lower time frame range, where is it? Like, even this lower time frame range, I need to see some sort of retracement. That's going to take me out on YM right there, guys. Very small risk on that because that was the invalidation, right? You can see that high. That's where we diverged at. So I'm not really interested in looking for anything past that in terms of holding a position. It doesn't make any sense for me to do it. Yeah, it's really just like chopping higher. You can see that, right? And there's no sequences for me to get involved. Yeah. I think that's my only look. Hey, if you keep your stop loss that hourly high, you might be okay on YM here. I just want to see this internal range before we go any higher. See NASDAQ starting to reverse off that high, which is a very good sign. It's a form of strength switching. Yeah, we can see this form of strength switching up here when it takes that high. Again, I'm looking to see if price wants to draw internal before we do anything else, right? It's very hard to fade the order flow here, though. Seriously, it's very bullish. Yeah, my trading does this thing where like it lags out every once in a while. There we go. Yeah, can be watching this internal, guys, right? Yeah, the only thing I would be looking for, guys, right, is just for price to come back internal before we trade higher here. But again, fighting this market is extremely tough. It's extremely bullish. So you have to get in around these extremes. You have to get in around the extremes, meaning like these early highs that are diverged at, right? This is that 10 a.m. high. If it's going to reverse, it's not going to take out that high, right? It's going to stay in respect of that high. And we're going to see this start to trade lower here. But we just want to see a retracement, really. Pretty hard to frame anything though, guys. Right, these very, very kind of choppy moves are what you want to stay out of. That's why, like, when you get very high in the range, it becomes difficult, right, to trade with those sequences. Like for me, like one of those things is just simple. Like I can't long up here. I'm going to need to see price draw back into this range. If we do not see like that form of retracement, it's just not tradable. I can't. There's no opportunity for me. So let's see. Let's see. The YM is like the most likely to give that retracement. You can see ES also wants to flip here. We're watching this 30-minute candle, right? And it's this gap here on the YM that's most interesting to me. It's a 30-minute gap, right? You have these overlapping wicks here. And then for ES, for example, it'd just be this 30-minute gap in here, right? This candle's low. That's essentially the first area where we're looking to see if price wants to trade back into for potential longs. But I don't think I'm going to get a long just based on how this is forming. Like, pretty boring and honestly pretty unintuitive. The winners are being finalized. I feel crazy FOMO right now. I mean, yeah, that's the easiest thing to do is to feel FOMO. 100%. If you don't have a sequence to trade with, you're gonna feel FOMO, right? Like, you don't know what you're doing, you don't know why you're looking for it. You're gonna get chopped up in this shit. Sorry for my language. You're gonna get chopped up in this price action. Like, it's just really choppy, right? That's why we have like invalidations. Like for me, it's I just can't long up here. Right? The only thing I can do is look for this hourly candle to be diverged at, right? Like this, and then for us to trade back into the range. And I want to trade back into this range. That's it. There's nothing else. Like there is no other setup, right? And you can see like it's high resistance because price wants to trade higher here, right? Clearly, price wants to trade higher here. So fighting this direction is very tough. I'd rather not place a trade now because of FOMO and then what? Yeah, exactly. Yeah, you gotta live with the pain of regret for like a lot longer than the pain of, you know, impatience for taking the trade. Really good idea, yeah. I've also been waiting like all day, but like, there's nothing. Like realistically, there's nothing. Like it's like I want to see if we come back into the range, how we react, right? Because this asset is clearly bullish. It's hard to fade, but like these are not the types of candles I want to be longing higher. My idea, simple, right? We have some sort of divergence at the high. I want to see if price can draw back into this range. Ideally into like this low would be like a very nice place for us to be able to look for longs for this asset, right? If this asset retraced and this asset came into this gap, the space between this low and this low are very large. So we could have that spaced out divergence, trade higher from it, right? The giveaway winners? Yeah, you can win every single time you guys tune in. So it's definitely just worth it to show up, honestly. It's like an awesome offer. Yeah, sometimes it's nice for me to come on these streams, guys, and just like do nothing with you. Seriously, just like watch price, you know, talk about the market a bit, recognize that there's not a lot of opportunity, and then like just wait for stuff, right? Like we're gonna wait and see if this happens. We have some ideas about where we want to see price draw back into. My dog's getting impatient now in the background. This is about the time usually we go for like a walk, and he is a creature of habit. Yes, bud, we're gonna go soon. Yes, don't worry. He's like me. He's like, he has his schedules for sure. Yes, buddy, we're going soon. I don't know if you can hear him in the background, but that's him. He is so cute. There was a perfect 1 hour sweep, 5 minutes 60. Yeah, on NASDAQ. Yeah. Yeah, exactly. Being patient is very important, right? Like for me, it's like I said, sequences form. We're going to get high probability ones. We're going to get ones that we don't want to be a part of. Like you can trade this retracement, like we talked about earlier, like on that 5-minute inversion. You just got to sit through this. Like this is the only sequence that you can trade, right? So you just got to sit through it. And you can be targeting these lows. But that's the only thing that makes sense for me, right? As like an idea is the only thing that makes sense for me. Is that type of sequence, right? So you just wait for it. You have to be patient. So let's see if we can get that reaccumulation in that area we talked about, right? That's what we're looking for. Again, this is like a 30-minute low, right? It's a gap on these assets. So we'd see YM trading into a gap, right? That retracement idea. We don't get burned longing the high up here. And then of course you have premium discount concept. Now for me, right? I'm just looking at this range, guys. This range is like the whole range. So we have this premium discount. Now you can see we're in such a premium market here. It does not make sense to long. Even if you look at this range, we're in a premium market. So then look where I want to see YM draw back into, right? It's just discount. It's not like I want to see a reversal. I just want to see a retracement. Just that discount is all we're asking for, right? So that's like the logic. And you can see this is going to give us opportunities, right, to look for those long setups if it forms. Like if we are to come into this low, for example, right? Why I'm leaving that failure swing here. All right, so again, still this idea of trading back into these lows. Oh, you guys are quick with that form. Really quick. The short that I take on YM is going to be this inversion, right? We talked about it earlier. It's like this. I took it on some evals, no funded accounts taking this trade, covering the S&T, and then looking for a price trade back in the range. The reason why I don't take it on funded is because the risk to reward is just not good, right? For my draws, but it's the only look that I would take, right? So put it on an evaluation account, or like just watch it, don't even trade it, just like paper trade it in your head. Like again, it's really choppy and it's counter trend, so I'm not expecting this to be like one-sided delivery. See how this is very one-sided? This is like counter trend, so I expect like high resistance. You can see high resistance liquidity in here, right? But yeah, it looks something like this, dude. I have my hourly invalidation, which is like the key level invalidation. But yeah, I don't generally take trades on like, large amounts of capital with sub 1 or with sub 2R risk to reward. It's just, I like that asymmetry of the upside, right, with my reward. Let's see if it delivers, right? We have a couple more. We have like 10 minutes left in my segment. We'll see what happens before 11:30. Again, very high resistance. You can see the market clearly wants to go higher today. So any trade you take against that is going to be higher, like resistance, right? Lower probability. I'd like to see, like I said, ES come down into this gap. I like to see YM come into this discounted market. That would be ideal. Like those sequences would be absolutely ideal for me. Then it looks like that would be, like I said, remember I talked about earlier, that alignment with that new 90-minute candle, like seeing some sort of retracement, this 90-minute candle off the high, and then leaving a gap or something, and then like trading into the gap, like like this, dude, like that is like so high probability in terms of the range we're in. It's a way better look than just longing up here. It's impossible to do that. It's almost impossible to do that. In fact, I can't do that. My model won't allow me to do that, right? So the only idea is like trading lower for now. I appreciate you a lot of fees. I'll be waiting for your next video. I appreciate that too, man. Thank you. Yeah, it should be definitely coming out soon. Hopefully this week. I may do it at 14,000 subs, and I'm at like 1300, 800 or 13,900 or something like that. So really, really soon. Definitely hope you guys learn something from those. I put a lot of energy into those videos. Try and teach as much as I know. Then you guys can understand my approach a bit better. That's what these streams are good for too, right? You watch these streams back and you're like, oh, okay, I kind of understand the approach a bit. When I was starting trading, like I said last month segment here, I didn't have any approach because I didn't know where to look. And that like slowed down my progress by like years. Like genuinely, I spent months and months and months just like spinning my tires. I had no strategy, which is like not good, obviously. Like you're not trading like a professional then, right? But you'd be surprised. The majority of traders don't have strategy, right? They just trade breakdowns. I do trade breakdowns on my Twitter, on my YouTube, on my Discord. I do it everywhere. Like, yeah. I wish I could turn back the clock to learn these concepts a couple years ago. Absolutely, man. Me too. If I'd started with this kind of knowledge and like where I was looking, I've had a lot more success in my trading career. But, you know, that's the beauty of trading is like, once you understand, you have some systems, you can scale with time, right? We always feel like we're late to the game in trading, everyone. Is there a discount currently for my Discord? There isn't right now. I see it as a lot of value. You don't have to be in it, obviously, but I definitely see it as a lot of value. I'm very active in there. I pretty much answer all the questions I can see, and like I try and teach my students as much as I know, guys. Seriously, I try and teach you guys as much as I know. Just like a different place, different community, different people. Right, so this would be that first area where if I was in a short, I'd be looking to like, you know, reduce my risk a bit. Again, you can see the RR here is not fantastic, right? Which is why we don't take it on any sort of like, I don't take it on any sort of like funded account, for example. But like on evaluation account or something, right? It's just an asymmetric trade, slightly 1.3 R to the draw, or this is like a 1-to-1 R-ish here. Just, yeah, just not the kind of setup you'll see me like take frequently, but I like to watch this because it's something you do during our segment, right? It's something we can do because I'm not trading like long here and I want to go long. But you guys, I hope you learned something about like high resistance and low resistance liquidity runs. Like the best example from today is going to be HRLR versus LRLR. And we're using premium and discount, right? And the idea of ranges to frame high probability setups. We want to be long the market in a relative discount to a range. Okay, if your draw on liquidity is this high, you want to be getting long up in, you know, in here in this region down here, because this region down here is going to support the lowest resistance liquidity run. Now, as you get higher and higher into dealing ranges, right, you can see how price tends to form new phases of price. And here you can see we have some consolidation, and here we have a retracement. And you can see like you can easily get stuck trading this, like this. And this is extremely hard to navigate as a trader. Like this type of price action is difficult, very tough, honestly, very tough, because price is just lethargic and it's not really moving, you know, with much speed to many places. Now, it also, you know, consolidates, runs lows, it runs highs, it stays, you know, without expanding. Now compare that to like that, right? It's very, very different like mechanism of price delivery. So we can learn a lot about kind of how price operates in ranges based on premium and discount. And the rule of thumb is that after expansion, expect a new phase of price. Now, where is that phase of price going to occur and where are we expanding into? Just look left, okay? So you're gonna say like, where are we looking? Just look left. What are we trading into here? A daily high, okay? we're trading into daily highs. That's where you can expect a new phase of price, okay? Here it is. Above this high, expect a new phase of price, okay? And if you do that, you're gonna see that there isn't really a sequence for you to get involved in price here, right? We just didn't see any sort of meaningful new swing, right? New like swing formation like we did down here, right? So you wait for it. Like now we might be forming that right here, right? Could be forming that. So that's the power of like ranges, right? Time and phase of price. Okay, so that'll call it for my segment today. Hopefully you learned something. And yeah, I'm probably gonna hold charts myself. Like there's not much I can do on this day either, right? Just watching price and we're gonna see what happens. So I will see you guys all back here next Wednesday for my segment. Please give me a like on the stream if you enjoyed it. And yeah, see you soon. Peace, guys.
Shiver and the charts go insane. You know, legends just locked in again. Bull Barbie's got that red hot streak, and methodical man's moves are sleek. Trends don't chase, trends surrender. S&P and NASDAQ, remember her. Stops freeze and profits obey when these two trade.
The lasers are back.
The computer is working. Good morning.
I uncrashed it.
She got it out. She got it off the ground from outside.
Yeah, it just needed to be lubed up a little. Needed to oil some stuff, you know, fill in the windshield wiper fluid.
Gave it a couple shots in the back. Now it's working. Let's go. How'd your morning go?
That's pretty good. Had some good trades.
Yeah, we were kind of back in the saddle today too, making some money. So it always helps when the pre-orb wins, you know.
Yeah.
So
we definitely want that. The regular 15-minute orb won also. The short pre-market won, and then I've taken a few longs off of this. I'm kind of tired of taking longs at this point.
What?
But for today.
The bull Barbie is tired of longs. What is this?
I was kind of thinking we might still get up to 69.30 to 35, something like that, but we'll have to see. At some point, I think we're due for a pullback.
My honest opinion is the highest level I got marked out is 69.26 on ES there. I don't even have anything above.
Oh, and
that.
I see you're long, so you're already back in it.
Yeah, we're long off the 2-minute setup here, 21 EMA. Really, your take profit.
We'll
I took it with small size, just 1 micro. I should be scaling at 116. Instead, I'm just going to move my stop to break even there.
Well, the hard thing is I was in a position earlier where my runner was going for up here like 69.30, but I got trailed out. So I kind of just like over that trade. I was ready for the next one, but who knows? Maybe it'll still go without me.
So now my stop's to break even. So we'll see if it squeezes to the 24. That's all we're looking for. Just kind of
get through these highs.
Kind of like a mechanical target here of 25 points. I mean, I could scale at the high here, but
did you see NASDAQ's double topping and ES is not yet?
Yeah. So that could be your first sign of a reversal here. Could be. So
I think reversals are bullish because sometimes we got to just refuel the tank.
That's true.
Especially if it's a big old muscle car.
It's going down to go up.
Hey, I've got my truck working so good. I'm getting over 10 miles a gallon now. So
10 miles a gallon. Perfect.
Getting like 12. I do good. So
I don't know. My car's not getting great. I think I get probably like 22 or 23. So
well, my modern one can compete with that, but
she's converting to bear Barbie. She might be. That's kind of the problem.
Just for a little bit. I'm bullish on shorts.
Marcine said full port. No, Marcine, nothing like that.
You know, I have been taking my own advice and taking fewer trades and being real careful about my setups. And man, it's been showing.
Nothing wrong with that.
I mean, my accounts are doing real good.
I saw a video that Barbie posted that said, "This is why you're broke."
It's a little dramatic, but yeah.
Something like that. Corb found my little brother last night in Asia. Well, he's been on here before, Corb, so you can say his name, Husk. It's fine. He filled in for me one day here.
Yeah, we got to know him real good.
Yeah, why not? Might get stopped out break even here, which will be sad, but all right.
Oh,
I mean, what are you going to do there, you know? Here's the thing. So we do have an SMT right now at the highs with the ES, right?
that it put in after you entered, so you know.
Yeah. So ES did not make a high, NASDAQ did. So theoretically, like, you know, if you get a little, if we can get a clean close back below this gap, which is not very obvious, let's be honest. It's not very obvious. I probably wouldn't even count it typically. But yeah, if you could get a clean close below that gap, that could kind of be your first sign of maybe a move lower. And then your stop to break even would kind of be there.
Yeah, we were in a similar spot yesterday where it looked like they could still go for a higher target, but they were also showing signs of exhaustion, and we're kind of in the middle of what that potential range could be.
Yeah, for sure. And I mean, that's the thing is like, do you ever want to take like, and this is one of the things like I talk about or I think about is like, do I ever want to take the first short setup, right? Probably not, because let's just think of it from this perspective. This could close below and then it could just manipulate one more time higher.
Yeah.
And then you could actually get the better setup. So the first setup could trap you. We'll kind of just watch it and see what happens.
I mean, I could definitely see that a trap move higher would get me more interested in the short, to be honest. So.
And I am green on all the accounts today, guys. We're up 255 on this account. You know, unfortunately, Friday I did end up blowing the 25K account. It happened.
No.
Yeah.
Is it that tight drawdown?
Yeah. Well, it just kind of I just couldn't get it to. I got it back to negative 675, and then the next trade I took just cost me. So a little bit of over trading there, and.
What am I telling you with the over trading?
Yeah, it's not.
I've been focusing on that, and it's really been helping.
And guys, I don't know if anyone else has experienced this. I was having a little bit of trouble purchasing a new eval. So if you do have trouble purchasing one, switch over to a different browser. I didn't know that. Found that out today. So switch over to a different browser, and that will it should fix that issue. So if anybody
joining the tech support team today.
Yeah, we're on the tech support team. Yeah, we got to get in there. So, but I did do the chat. I couldn't purchase one. I did the chat very quick. It was less than a minute. I had somebody on there and they were like, yep, just switch to a different browser and it should work. And so that's what I did.
There we go.
So whenever I get information, I just pass it on to you guys, you know?
Thank you so much, buddy.
That's what we try to do. Michael's showing his love again. His love.
Every day. It's the crew.
Always in here. Guys, if you haven't already hit that like button for us, you know the deal. Looks like we're creeping up.
Baddies together.
Yeah, we're creeping up really close to 60,000 subscribers here. We're only what, like 600 away? Less than.
Yeah, I mean, if you give us the like on your dog's account and your mom's account and your wife's boyfriend's account, we'll get there real fast.
PXT wants to know, how many stops do I take to stop trading for the day? So PXT typically on my funded accounts, I try to go with one trade a day. Typically. Sometimes I might take 2 or 3. On an eval, I don't really have a limit. I'll just take whatever I feel like. You know, I'll have like a daily, I'll feel like a daily loss limit. You know, I'll try to implement a daily loss limit or something. But yeah. But on funded accounts, I just try to stick to the one trade a day idea. Doesn't always work, but for the most part, that's what I try to do. So,
worked out today.
Yeah, we're up $400. I mean, that's the thing going for the 2 hours. So the pre-orb, let me show you guys the pre-orb for today, and we'll talk about
show me your pre-orb.
How it's done the last 2 weeks. So you can see today we opened up The two purple lines are the high and the low between 9 and 9:15 a.m. before the market opens. And we opened up just inside the orb here. We were just inside. So it's approximately 33 points for your 2R today. And you could see that it paid 56 points with basically no drawdown. So it worked out quite nicely for the 2R there. I risked $200 for $400. That's the idea of how I do it. So it was 2 for 5 last week, and it's 1 for 2 this week, which makes it 3 for 7 in the last 7 trading days, which is profitable still. If you captured both wins last week, you were green $200, and then you would be up $200 so far this week. So up 400 between the 2 weeks so far. So the nice thing about it is it's only got to go 2 out of 5 to make money, 4 out of 10. So, from a theoretical standpoint, if it goes 4 out of 10 for the entire month, so let's just call it 8 out of 20, then you would make $1,600 a month, which would get you a payout, right? So within reason.
So did everyone pay attention in math class?
Yeah, it's just simple math. Just simple math.
You only have to do the math when you're doing your prep work, and then you can follow the plan and the math should work out in theory.
Yeah, if you go for a 2R, that's the nice thing. That's the reason why, like most of the strategies, I don't necessarily look for a 2R on my normal trading. But on that trade, I think going for the 2R as opposed to the 1 makes a lot more sense. You have to win a lot less often. If you just went for the 1R, then you need it to be 55 or 60% for it to make sense. So, and of course, if you go for a 1R, obviously you're going to eliminate some losses that way. But I don't know if it's a huge, is it a big enough advantage there to where it makes up for not going for the 2R? But I like the 2R better. So
I do too. Plus, the kind of interesting thing about the way you're trading that is you're taking a range from a less volatile time and putting it in a higher volatility time. So it makes sense that you can go for that higher reward to risk.
And think about it. It's a mechanical trade to where even if you're at work, you could literally log on at 9:25. You could trade for 6 minutes and be done for the day. You either get a win, you get a loss, one or the other, and walk away, close the computer. So, and at the end of the day,
you have to focus really hard for a few minutes.
You just got to focus. That's it.
I know. Most of you guys can last at least a few minutes.
Probably. Guys, we got the link to the YouTube and the X for Barbie and I at the top of the chat there. So if you guys want to go over there and give us a follow, I will follow you back on X if you follow me. Unfortunately, they only allow you to follow so many people at a certain, within a certain time frame. So I'm still behind.
Throttling you.
Yeah, I'm going to get you. I'm guessing since I don't pay for it, that's probably why. Methodical Man's cheap. I don't know what to tell you. He's cheap.
I'm expensive.
When it comes to his own self, his own stuff. So he's cheap. But yeah, you guys will see the forums drop in the chat eventually. And also you can enter the giveaway on X. So you got to like and share and tag MyFundedTV and hashtag MyFundedFutures, I believe is how you do it. Are there any other steps to let us know in the chat?
Yeah, definitely pay attention in chat because they make it really clear in just one quick little sentence, everything you need to do. It's easy. And I like to repost y'all's things. I don't always get the notifications on X. I'm not on there enough, but when I'll catch up too. So when it's a good, funny post, I'll repost it for sure.
Yeah, you can enter both. And they give away 5, I believe it's 5 accounts per day on X, if I'm not mistaken. So
I think Outer CT is lost.
What happened to Outer? Where's he at?
He's in chat.
What up, Outer? Oh, he did the exclamation point, MM.
Yeah.
That's not how you enter the giveaway, Outer. Come on, man. That's just on my stream.
Close.
Yeah. So Spades of hearts. You can participate in the X now. 2 more picks remain for today. Let's go.
There you go.
Jump in there. And anybody else who hasn't entered the X giveaway, go give us a follow. Obviously, follow MyFundedTV and MyFundedFutures as well. And yeah.
Follow the whole crew. We got links all over the place in the description too. So
how did everybody do today? Is everybody green? Did you guys have a nice?
I hope so.
I mean, if you bought the pullback today, you did pretty well.
Yeah.
It was one of those days. So
I thought the pullback pre-market was actually really clean too. Some days you could come to the market and it's like, oh, there it is, let's go. And some days it feels really tough. And so I just try to go with the flow and then not fight resistance.
Thank you, Michael. We appreciate that. All green, Adam and Spinna. Let's go. It is chopping mix. Like if you didn't get an entry before 10 o'clock today, really a little bit tough after 10 o'clock.
I can tell you about my trades if y'all
let's go over Barbie's trades.
would like to see. Well, first I'll just kind of start with the orb because it's oops, I pressed the wrong button there, got this chart duplicated. I'm trying to just show you the orb real quick because it was real clean and simple. It was we held around the high of both orbs when we broke, so I like that. Somehow my bot didn't get triggered in my live account, but the bot did post what it should have done. I mean, we just made a straight run. We had a relatively small range compared to the volatility, so it worked out really nice. ES took, I take profit at the second line, just a 1-to-1. So the pre-orb that Myth does is taking a smaller range because it's pre-market and then putting it in a wider range. Mine's not doing that. So I go for the 1-to-1 on this one. So that worked out. So that was kind of working in the background. And then the other thing that I had going here was I got to the computer about right here on ES. So I saw that pre-market, we had already dipped down and we're kind of filling out the top of this range. This was a real floaty area for me. So I was kind of thinking that made a lot of sense that it went right up and tested the 6,900 area. We had come back down and I didn't, actually I was the retest that I was watching because I got this big aggressive candle. So we had this nice retest, the 6,900 up there, and I thought it was pretty likely that we were going to come down to 68, 65. I put it in the Discord too. So I took this trade. I took my profits at 75 down here and then just waited for the market to open. So once the market was open, I was wondering if we were just going to retrace that whole thing. So I was just looking for the sign of that. And then we dipped down real quick and bounced off of the 68.30 area, or 68.65 area. And I didn't get in that soon because of the volatility in the first 5 minutes, but I did get in on the retest. So that ended up really nice. And then I exited and even re-entered up here for an extra little break of the 6,900.
Yeah.
Just had to get long this morning.
Yeah. Well, the opening range was a short for me. So I did take the short, but then I was watching ES level. I was watching the 76 level on ES there. And as soon as that reclaimed,
yeah,
I longed and got a couple of nice winners off that. Yeah,
that
we do
was
have
a really good spot. We were watching that on order flow too. There was a whole bunch at 75. So once we cleared that, that was a really good spot.
Yeah, we do have the FOMC minutes only today at 2 o'clock. So I do think that's probably in large part why the market's just kind of chopping.
Yeah, that's a good point. And even though it's not a big mover, like when they make the rate announcement and everything, it still will do some crazy little murder candle and the market waits on it because sometimes it can be dramatic. We're not expecting drama today, but sometimes it happens.
Lava Lynn, the pre-orb is from 9 a.m. Eastern to 9:15 a.m. Eastern. It's the high and the low. So just keep it simple, mark it out. And it's not, I mean, like when it opens up inside the range like it did today, it makes it the most simple. Tags in one side, you take the other side off, and you're good to go. So, and it either wins or it loses. That's just how we go with it. So, one thing I was looking at though on that orb today, do I have it? Let me see, because I thought, yeah, so like on my screen it's showing that it popped out. Oh, was it not set here yet? I'm on the 2 minutes, so that might be why I'm looking at it like that. Let me see. Go back to the 1 minute here. All right. So
For the
on the
15-minute
1 minute,
orb?
yeah, I'm just looking.
It did pop up and then come back down to the midpoint. That's why I never do the midpoint as the stop out. I had a lot of people suggest that to me, but in the back testing, that's just way too volatile a spot. There's so many times it stops out there and then runs. So that's why I moved my stop all the way back to below the other side.
Well,
So it did tag in, take some heat, and then go.
Well, I don't know if you can see on my screen here. It popped out. So like, I don't know why my 945 candle is not showing that the orb is up here. Because where do you have the top at? Mine is marking it out at 68.75. But if I manually mark it, it looks like it's at 78.75.
I've got 69.25, I think.
So you do have the lower one as well.
Yeah.
That's weird. I don't know why that shows that that's the 945 candle. That's odd.
68.75 with the exact.
That was the exact? Okay. So it did mark it out.
Anyway, so I trade that on MNQ.
So you guys see that death candle right there, right through that gap we just closed. So if you are in the short, your break even would be 25.077. That probably would be maybe a scale spot as well. It's only 12 points, but this again is your first sign that maybe we're going to make a move lower here.
I'm still seeing it, to be honest. I see there is a MACD divergence setting up on NASDAQ. I favor them on ES, but you know, if NASDAQ sets it up, it could follow through. That's one of my favorite setups in the late morning. So we'll see.
One thing I will say here is that the ES, it kind of has broken structure on just the smaller time frame, but certainly not on the larger time frame here. So very, I mean, it is a dangerous short. I mean, we are, you know, counter trend if you are going to take it. So you got to keep all
it's
that.
It's not A plus for me, definitely.
Yeah. So I am considering maybe jumping in here for a scalp down to 77 here. I might stab short.
The order flow is falling apart too a little bit. So, I mean, that's good for that idea.
All right, I'm in. Again, I'm going to go stop to break even at 77.
Let's see Miss Screen if we can.
We'll target lower. So I'm short 89.25. And I'm going to go stop to break even at 77 if we get there. And the stop out, I mean, realistically is right there. Could really just put it at the high, but. And I'm just in a single micro here. Ideally, you might be in 2 or 3 micros and you could scale at 77.
Small idea, small trade, small size kind of deal.
And what I might do, I think I'm just going to take profit at 77. I'm not even going to be tricky here. Let's just take what we can. Since this is kind of counter trend, I think it makes sense.
Keep it easy.
Keep it at 12 points here. So we are already at our daily target on this account. So really, you know, no need to take any more trades, but if you see something, we'll take it. So. All right, very close here to the take profit, so I'm going to go ahead and go stop to break even.
I still think this could keep going a little bit, at least to like 5 more points on ES.
I agree. I think it could too. There we go.
Boom.
So you can see that started with the SMT at the high. That's where it starts at.
Mm-hmm.
Starts with the SMT.
The order flow is falling apart. We got a MACD cross on the 5-minute.
And then, like, do any of these candles here look like that short's going to work? No. Those candles don't look like it's going to work. But what changes your mind? Look at that candle. That candle changes my mind, right? At that point, I'm like, all right, we can take the short. So, winner is Levi, 1001. Congratulations. Google form winners, 337 Dominic, Norendra, Mr. Latex, Mystic Rick Trading, Victor Boredom. Are you present? Make yourselves known.
Got extra balloons and confetti today.
Congratulations, and quickly make yourself known, because if you don't, then yeah. Also, one more thing I'm going to point out here, guys. The 50 EMA has not been touched today on the 2 minute.
Ooh.
It crossed over here. It's not been touched. That is an area where you might get a little bit of a bounce. Now, I'm not going to take that. I'm not going to take that because we have the SMT at the high. Well, you can
We're approaching
maybe
support on ES a little bit here too at 08, 09, or 10.
Yeah, I like that area too. I was just thinking like this is an area where you might could get some points off a bounce. Like I said, I'm not going to take it, but that is an area that does kind of make sense.
But we share ideas.
Yeah. So that puts us up $278 on the day on this account. That's a good first day.
Ooh, nice.
We'll see if
We
we can
mentioned it was first day.
Yeah, it's the first day. Like I said, I blew that account on Friday. And the sad thing about the account on Friday, we were only like $400 from passing. So, but it's okay. We didn't stick to our rules and we got punished.
Yeah, that always seems to be the theme.
So
every time you come on here and you're like, well,
yeah. We break the rules. Someone in my chat always says rules are meant to be broken. That's what they tell me.
Well, I think you need to fade that commenter there.
So what's a really good trade? Like what's a good target if you're in this short? I mean, what's a really good target here? Well, I mean, if you just look, where does this trend line liquidity end? It ends down here at 996.75. So for me, this would be a good target. If this fails, it just means price action's not very good, right? I would assume that if it starts to run this trend line liquidity, because we've got 1 touch, 2 touches, 3 touches, 4 touches. I mean, it's not like the perfect trend line, but it's decent enough. I would expect us to maybe retrace down here to the 25,000 level. That also does not put us in discount of the range, even at that level.
Kind of the range that I was looking at on ES, and I'm annoyed that we're in the middle of it because that's not an obvious buy or sell spot. But the bottom side of it's kind of 6,900, and the top side of it is 6,930. That's why I keep having that 30 level in my brain because that's what I was going for earlier. But we're heading down towards the bottom of it right now, so maybe we could get down to 6,900 and then pop back up towards the highs.
So what I'll do sometimes, if I can't visualize the whole range, I'll just mark out,
draw a picture.
Just mark out a level that we think is that would make the most sense, right? This kind of lines right up with VWAP as well. So that would be discount of the entire daily range. So that could be your target. You could maybe hold a runner to there potentially. And we'll see what happens.
And VWAP's still way down there too, 926.
Yeah, and that puts us in discount. So that's what I'm saying. You could target there if you wanted to. What up, Capitalize? Where have you been, Capitalize? You've been cheating on us with another streamer? Is that what's been going on? Rude. Or did you just get out of timeout? I mean, it's one or the other, right?
Always.
Yeah. He's either in timeout or he's cheating. So there's the bounce right off the 63 level. It might give you 10, 15 points there. It kind of like that. This is where it gets tricky on that type of trade where like it kind of almost touched it a moment ago. So it could still bounce here. I'm going to zoom in for you guys a little bit. I know I hate when the charts are like zoomed out like that. I like for you guys to be able to see kind of a little bit more detail here. So
yeah, let me see it bigger.
So zoom in for you. Let's see if this thing can push back up to the initial balance high there, 75. That would give you the 10 points off this level. I just don't know that it does it. We'll see.
ES is looking a little more aggressive. I think they're going to at least try for the 05 level, see if we get down to 6,900.
ES actually has quite a bit of distance. I think if it clears 07, then I think VWAP down there at the 95 is in play.
Let's go. Yeah, I think
Capitalize.
it's a little more clean.
You're not cheating on us? Perfect. Perfect.
He's been trading. I was talking to him this morning. He was looking at metals.
Oh, I did not get on the charts last night. We had a doubleheader baseball game. So we lost both. Go team.
Oh.
But I did look back at gold, and it looked like it had 2 opportunities that I would have taken. they both would have won. So just keeping it simple on gold. Keeping her simple. If we get through the 50 EMA here, you know, I think, and that did bounce back up to like 74. I don't think it hit 75. If we can get through this 50 EMA, I think we got the room to the downside. You also have the top of the hour coming up here in about 28 seconds, which could give us a little something.
Let's keep pushing it down. I still like the move lower. Let's go.
Capitalize is faithful to silver. Oof.
He was cheating on NASDAQ, but I think NASDAQ is in the dust right now.
Yeah. Let's see kind of what happens here. Top of the hour is going to tell us something.
We're almost down to your 7 spot, but I think it's going to keep trying to creep down.
So here's top of the hour.
Do it.
Yeah, it seems like you and I mark out very similar levels on ES. I'm usually like a point or two off from yours, but they're very similar.
Well, you know who are superior.
So who's our superior? I don't know. I'm not. Hey, listen, I'm not analyzing the ES at all. So, you know, people in my stream know this. I'm just marking out the levels. So
I know this too.
yeah, we just mark them out. That's what we do.
I use quants on things that I don't mark out, so I feel
yeah. I mean, whatever saves time and, you know, effort, I'm okay with it.
If I can watch ES levels that I've plotted out and I'm watching a similar market like NASDAQ and I have quants on it, and when the quant lines up with the level that I'm watching on the other chart, I mean, there's a lot of confidence in that.
Lucky aces. Oh my goodness. That was hilarious. Oh, that's the problem with me, Lucky Aces. You catch me when I'm hangry on days that I don't eat breakfast. So
yeah, he's grumpy, hungry bear right now.
Yeah. Look at this thing push. Look at that push right off the 50 there. So it did give you the 15 points. It just took a minute. So yeah. X on capitalized, debit deep, check mark. Let's go.
There might be a bit of a vendetta going on there. I'm not sure what's going on.
Are we supposed to hold on? Let me see if I can find a check mark. What am I supposed to put? There we go. I found it. All right, guys, drop it in the chat. Which one do you like, capitalize or debit deep? The X for capitalize or the check for debit deep? I'm not sure. I go with the debit deep. Corb, I have not ate anything since about 6 o'clock yesterday. 6 p.m. yesterday.
That's serious.
Yeah. But
do you at least get to have coffee?
No, I don't even drink coffee. I've had water today. That's it. Water. Just water.
Hardcore.
So
I'm telling you need a binge day. Remind your body how to process things.
Oh, I did have a new low weight today, 262.8.
There you go.
New low weight. So not by much. This is not a good sign for the shorts. Now, what you don't want to see here is
good for whoever likes chop. Who sold premium?
What you don't want to see is you don't want to see this make a new high. If this makes a new high, then kind of all bets are off there. So
yeah, actually, from the options perspective, they're sitting in the middle of a daily range burning premium. Market makers are going to be in favor of chop here.
Everybody likes Deba. All right, capitalize. You got to switch. Is Deba banned? Is that the problem, capitalize? This is Quan Tower. Take note. This is Quan Tower. I'll kind of go over my indicators that I'm using right now, guys. I don't use them all that often, but I do like the 50 EMAs, the white line, the 21 EMAs red, and the 9 is the blue. The yellow line down below is your VWAP, and then everything that you see in between here, these red lines are pivot points. This, whatever color this is the initial balance high. So that's the high from the first hour of the market open. And then, yeah. So I don't really use the EMAs all that often. I will sometimes use them on a trend day to maybe
I like
take
them on
a
the
long.
higher time frames.
That's a good point too. And
Like on the
that's
higher
kind of-
time frames, I feel like the hedge funds are watching those and the institutions are watching that more. But on the lower time frames, they don't give a shit.
Yeah, that's true. And like the thing is, like I know that the 50 EMA on the 2-minute chart is the 21 EMA on the 5. Like when you start kind of intertwining them in higher time frames, you figure out which one is which, on the higher time frame. So they're literally just a couple of points off from the 50 EMA on the 2 versus the 21 on the 5. So this keeps me from having to even pay attention to the other time frame because I know like that's where that is. So get a nice little pushback up here, kind of reclaiming that 10 area that you were talking about on ES.
Yep. I think Cartoon Futures was talking about this in chat too. That they were selling 600 puts. Basically, what that means, if you're short options, that means that you want it to move away from that strike or just stay away. I don't even have to move. It can just stay away and not go anywhere. And so when you see that going on in the options market, it gives us a clue that there's potentially a lot of chop.
And like I said,
It makes a lot of sense. FOMC meeting minutes in a little bit.
Yeah, and if this breaks this SMT here, then you're probably just going to see the next leg higher. So that's the
Finally
problem
get
with
my 30.
Yeah. That's the problem with counter trend trading sometimes. Like looking for spots to short, they can make sense. But that's also why you see me just take short profit, because I mean, I think that this level down here would make sense if we're truly bearish, right? At this point, then we should hit the 996. Now, we might hold the high here and just turn right back down. That could be a better short opportunity. I don't know. But if we break the high, then all bets are off, and I think we make another leg higher.
I agree with that. We're getting pretty close to that too.
Yeah, you have to kind of think about it in both directions. Now,
they did give us a pullback, and one of the levels we were watching, well, I had 69.0750. That's where we bounced.
That's
so.
to the tick right there. That's actually the low of that candle. Yeah.
We did get a pullback.
Yep,
I told you my levels are good. I've always been a level wizard. I think it comes from SPX trading though.
So ES or NASDAQ's making a new high here. Let's see if ES follows suit.
Ooh, look at it's trying. It's almost there. 1.5 points or so to go. They can do that too.
Q Mendez. One thing I'll say, man, is like
They're going for 30.
Certain people are not for everybody, right? So like if you don't like a streamer or
I'm
a
not for
host,
everybody.
Yeah, I mean, like it's just is what it is. Just watch who you like. That's all that matters.
Haven't you seen that guy that's made 20 accounts to come on here and make the same insults over and over? I'm not for that guy. That's
It's just how it is. You watch who you like and just, go from there.
Yeah, I mean, some people are really aggressive too. That's why we have a wide range of people here. We have super scalpers. We have people that like longer trades. We've got people who are great at the morning session. We've got people who are really great at Asia. Some people are more aggressive. Some people are more patient. Yeah, you got to find your own space in trading. And there's not like a one best style. There's no best style. And I think part of that is we have to adapt all the time. I've adapted my trading constantly for what market we're in and just kind of what my mental state is too.
Yep, this is true.
I definitely am not going to overtrade when I have a lot going on personally and all that stuff. That's when you have to be extra cautious with that kind of stuff.
If you like watching vegetables, Barbie is your streamer, says Cartoon.
Yeah, I do have a lot. Here's the banana. I was just saying, like, this banana's getting worn out. I think I need a fresh banana.
Is Terry a super scalper? That's what Lucky Aces says. I don't know.
Good.
Is Terry super scalping? Yeah, I mean, maybe I need to pay a little more attention.
I don't know. I know SK does. He's because I'm not good, so I'll follow SK's trades, or I'm familiar with his trading. I will not mess with the things that he's called scalps. It doesn't jive really well with my trading style and how I execute. He has some very specific things that he does with scaling in and getting the fill in order to make those scalps work. And it just doesn't work really well with me. However, his patterns, the bigger, broader ideas that he's looking at work really, really, really well with the way that I look at the market level to level. So you can just find, if you have somebody great that you're looking up to, you can find something that really speaks to you and incorporate it in your own way, because your edge really needs to be your own.
Yeah, exactly. Yeah, I've watched Terry's streams a couple of times, like very early in the morning, but I don't remember her like doing the super scalp thing. But I mean, it could be something she's added.
I mean, I don't think she stays in positions long, so I can see from that perspective. She's not going to stick around for 2 hours in a trade.
Yeah, me either. Me either, for sure.
And
Guys,
I definitely consider you a scalper.
Yeah, I'm a scalper for sure. I know that. The new 25K Flex account, remember, it's just $49 for new users, $77 for existing users. Use code YouTube. Deal. That does end tomorrow. So you need to take advantage of that while you can. So guess what happened here, guys? Anybody see what happened here?
I was watching the ES. Is that what you're looking at?
Yeah, ES has yet to take the high.
It
so
did
kind
it
of
again.
Kind of the same scenario that we had a minute ago. Right.
You can watch it here, but yeah. I think they really are trying to push up to that 69.30 objective, and they're just running into too much resistance. And we'll just have to see. This is it's like the front line of the battle right here.
I think this is kind of the same scenario as we had a minute ago. If we get a death candle through here, then this is that manipulation leg that maybe we talked about might could happen. If ES does not break the high, then we will
we'll be bullish on shorts.
Yeah, we'll consider this again. I mean, it's the exact same scenario. Exact same scenario. And the only difference is the gap here on the 2 minute is much more obvious. It's about 12 points as opposed to 5. The 1 minute has several gaps in it, unfortunately, so we won't be able to use the 1 minute. So the 2 minute does look the cleanest. If you want to be safe, I guess you could use the 5.
I'm just all eyes on this ES high right now, because that's what determines everything.
Yeah, I like Quantower myself too, spades of hearts. You know, I know I like the other platforms too. I like Ninja and stuff as well, but I do like the simplicity of Quantower.
Yeah, I was about to say Ninja's really great for nerds.
Yeah, we compared Quantower as the iPhone and Ninja as the Galaxy or the Android one day.
It's harder to set up, but more powerful. Quantower is really powerful, though. I don't want to put against that, but you can download Quantower and start trading on it. You can't really do that on Ninja. I have a whole playlist that I've started on Ninja because of that.
Alex, you can trade gold. Can you trade micro gold, right?
Yeah, they had to. Well, the margin rates have changed and everything too. That's sort of a developing volatility.
Oh, come on. Give me the entry, Barbie. Come on. Don't let it go to my break even first. So what would invalidate this trade would be if it hits the 57.75 before this candle closes. That would invalidate.
It does seem like it's trying to move lower. It's hard. You have to give such a big stop loss on these things up here sometimes.
I'll probably take it if it's valid.
It better be valid.
Might not be. That's the unfortunate thing sometimes. We're right back to the 50 EMA too. I mean, like, I think the second touch is obviously going to be much weaker than the first touch. So
is this like curling? You got like that little extra touch.
All right, I'm going to take 2 micros here. So I'm going to take one, and if we bounce, I'll add a second. If we don't bounce, we'll just stick with a one.
What do you guys think of how SK shouts his orders out? I've seen him push the buttons before. But yeah, he prefers to have somebody else do that. He can't be bothered with that peasant work.
Oh, having somebody push the buttons for him.
Yeah. I was talking about that with my kids. They were thinking that might be a fun summer project where they would help them like learn to trade. Me just assigning them a thing, and when I call their thing, they enter the trade.
Yeah, we are like a minute out from the new 15-minute candle. You're not wrong.
Very slow, very sluggish. Definitely potential though.
I'm adding the second one here. And the idea is I'm just going to scale at the break-even point. And obviously we'll go break even there as well. Methodical, where's your stop? Pretty simple, guys. The stop is a close back above the gap.
It's all in his head.
I mean, I could put it here, you know, if you want it to really be on the chart, but really the stop out is a close back above the gap.
Methodical likes to live dangerously.
Yeah, a little bit. The only thing that I don't love about this trade is time, right? A lot of times you got to consider time and price, and we don't have time on our side here. So
no, and you do probably want to get this booked before FOMC stuff. So
yep, exactly. You think we'll get to 60K subs tomorrow? We'll see him.
I tend to take like kind of slower trades. So when we do have afternoon events like that, I tend to be real cautious about entering anything lunch hour because I don't want to be caught up and having to make that decision. And we're not trailed well enough.
100%. 100%. Now, interesting scenario here, guys. We created a new swing at 73. So now my break even moves to the new swing. You see how we closed below and we created a new swing low here. So now that's where my break even moves to. So if we get back below 73, that's where we'll move to break even.
How are we doing on our subs? This is a group project. We need y'all's help getting the channel to 60,000 subscribers. So good.
I know we needed less than 600 at the start of the stream. I don't know how much it is now.
Well, just to show that you're with the group project, you should probably go ahead and drop your like while we're here too. Somebody hasn't harassed you about it yet.
Capitalize. There is no stop. There's no stop. The account is the stop. No, I'm just kidding. Guys, if you're not a part of the Discord, please join the Discord. Abhishek just dropped the link in the chat there.
Special invite, very exclusive, only for those in chat.
All right, that's not a good reaction, obviously.
It's kind of just looking choppy to me. We could end up just chopping until we get this news.
Again, we do have the FOMC at 2 o'clock, just a minute, but still.
Someone was asking about FOMC and currency a little bit, and I don't know if this. A couple of years ago, we were synced up with this a little bit better. I think there's kind of some more things layered into this onion right now. But in general, the more hawkish they are, which is, being more aggressive, that's usually good for currency and bad for the market. And then the opposite would be true for dovish. So if they came out more dovish and passive and all that, then that would make the dollar tend to want to drop and the market move higher. But really, the market does what it wants to do. The market reacts how it wants to react.
420 said, breach emails his stop loss, or maybe mine.
I mean, it does get to that point sometimes. We've all been there. We're close, a few days out from the rebill, and you had a bad trade. It's now you got to get $1,500 or something. Yeah. There.
Guys, we only need 5 more subscribers to be within 500. I think that's what Abhishek was saying.
Let's do it.
So let's see if we can get 5 more subs here in the next few minutes.
So close. So close.
And so, like, the way I trade this kind of mechanically is you see, like, we create a new swing. This now becomes your break even. Well, if we create another swing and we don't close above, then now my break even's there. And it almost becomes like you're just going to, at the very best, it's going to be a break even trade. So looks like we're going to get stopped here.
Uh-oh.
So what we'll do is the closes above, I'll move my stop to the end of that candle. It looks like it's going to close above. And we got 5 seconds or so left on this candle. Unless we get a real deep pushback. So now I'm going to move my stop to here. So I'm still going to give it a chance to go down, but if it doesn't, I'm out.
The spot that I'm watching ES right now is literally that high. Because there's definitely a lot of orders sitting waiting for that.
Yeah, kind of a little double top up there at the 23 from earlier. Didn't quite run the high, so we'll see. Capitalize, you don't want to divide all your alts. We know your alts. We already know all your alts.
5 subscribers yet? Here's the deal, y'all. You want to be the guy who introduces your friends to this amazing stream, and they're going to be like, thank you, guy. You introduced me to the most amazing stream. I should buy you an account just for that.
Oof.
Yeah, Abhishek's the super stalker. You got to watch out for that. He knows what he's doing over there.
I mean, theoretically, I probably could leave this at the high, but I'm not going to. I'm going to play it the way I would normally play it.
Follow the rules, right? We were talking about this.
Yeah.
Follow the rules.
I like to break I'm a rule breaker sometimes. I don't know what to tell you. A little bit of a rule breaker. So far, the stop placement looks pretty good. I don't know. It missed me by a tick. It said, "Oh, you want to talk about me missing you? Let me come back and get you."
Yeah, I wouldn't be talking too much smack just yet.
No, get down there, guys. The pro account still has new users 50% off, existing users 30% off. Use code YouTube.
Unlimited uses. Yeah, that's the pro account.
That's
the big boy one.
You also got the 1 day to pass add-on.
Who's going for the big boy pro accounts? Show yourself.
So now I'm going to be watching that. We kind of put in a bullish gap here. This needs to get wrecked. Otherwise, I'm going to be stopped. This needs to get wrecked.
Ryan. See, guys, he won his very first MyFundedFutures account. So keep going for it.
Congratulations. If we can get a death candle back through this here, I think that'd be a great sign for me here.
Yeah, we just needed a good old murder candle.
That's right.
This is a counter trend trade, so it would be nice to see something in your favor here.
And again, it's not a huge loss either way, guys. I mean, it's 30 points, right? That's what I'm risking here. 30 points, 2 micros. Not a big deal. We kind of are keeping the risk defined. We'll still be green on the day. Probably would be up 150 still, even if we get stopped. One thing I didn't look at here, and what I could look at, and this might be the reason why we bounced there, we did not close below, or did we? No, I thought that I knew there was a small 1 minute gap down lower, but we didn't quite tap it. That was down there at 72.50, but I didn't quite get there. And like I said, I mean, when I entered the trade, is what I was talking about. I like the setup, but the only thing against us really here is time. We have FOMC minutes today, and we're in the middle of the lunch hour. So
danger zone for sure. That's why I didn't take it too. Is I've gotten to this point where I just have to take these A+ trades because it's working, and It's not here right now.
We're kind of flagging here, looking like it wants to go higher. Need a candle to change my mind. But we're already in the trade. So.
A big aggressive long one would probably change your mind too.
Well, that just stopped me out. So I want something that makes me think I'm not going to get stopped out.
Come on.
That's what we want.
I'm watching the flow too. I mean, they're just chewing on some orders up here at the high on ES. So it's just a matter of if, I mean, I can see that being a really strong profit taking level. I called that level out this morning because that's one that we had broken out of. I mean, I thought it was really clear on the hourly where the 69.20 area is. It's a spot that we had come down and broken through and then broke back up higher, retested. So I like it. Here we are.
The NQ is NQing again. All right, guys, look, and I'm going to tell you this.
Indeed.
If we get a big candle through here, I will add to my short.
Ooh.
I will add.
NQ is NQing. Very true words there.
So let's see what happens here. One thing to note that I am paying attention to, look at this teeny gap here.
So cute.
It's just a little teeny thing, but it's there. We need to close below both. Got to close below both here to get the ad going. I could aggressively add here, but feels wrong. That's a good candle. We just got to get it going on. Get through that next gap there. We may add.
Well, come on, trade. Hurry up. I don't even have money on this one. And I'm like, let's go.
The 1 minute already kind of inverse there back to the downside. It does have the singular. It doesn't have a singular gap in the leg as well. It's also got two gaps. So am I getting violated? Maybe. Maybe we are. You can never tell with NQ. It likes to do its own thing. So very tiny gap on the 1 minute down at 93 as well. So we tapped into it. See if we can get through it. This could be one of those trades that we don't see the result by the end of the stream.
Yeah, that's what I'm worried about right now.
So we got 3 minutes left before Matt comes up.
I mean, the other day we had it, whatever trade we were talking about, I don't remember, this might have been a couple days ago. The exact trade that we were talking about hit like 5 minutes after we closed.
That's what it likes to do. So I really want to see it close below this bottom gap. I mean, that's really what's holding us up right now. There's a little bitty gap right down there at the bottom. Also, we are at the whole number. Below the screen. All right. I don't know. You guys seem to get bothered by that. So I don't know that I want to do that.
Don't want to bother chat, or do we?
No, we don't want to. Oh. Get through it. Guys, as you come in, if you haven't already, hit the like button, subscribe if you're not yet subscribed. We appreciate you. Uh, 85 to 75. Yeah, I'm not going to panic here. Again, I got my stop where it needs to be. We get through this next little level here, I think that I'll probably be okay. But if it holds this level and pushes back up, then obviously we're probably going to get stopped out. So,
And it could be just because we have that FOMC stuff coming later that it does end up chopping and not really wanting to do anything exciting. But I mean, you're looking for something that's really in the range, so that I that's the argument for it. Let's go. Now it heard that Matt's coming up.
I said, oh, they're not going to get to see the end of the trade. Let's just drop it. So what I am going to do, guys, is I am going to scale out of 1 at that
Classic market
73 level. And you got to remember that is actually the break even is at 79.50. Now I could add here, like I talked about, but I'm not liking how slow it's kind of getting through the level, so I don't think I'm going to add.
I think that's what we're up for too, heading into this afternoon a little bit. Good time to enjoy your lunch, watching Matt, of course.
It's kind of a dirty close. It did close below on the 1 minute though. So the 1 minute did close below, the 2 minute did not there.
Dirty, dirty, dirty.
All right, guys. Well, that's going to do it for us today. We'll let you guys know. I mean, you guys know at 79.50, I'll go break even. But we do appreciate you guys watching, and we will see you tomorrow.
See ya, y'all.
Electric veins in the night. Feel the pulse, feel the bite. Welcome, rocket scooter. Burning trails where
You like my cup? It's MyFundedFutures themed. I love it so much. It is my favorite. I have a matcha lot. We've been doing matcha lattes lately instead of coffee in here. Welcome to the show, guys. So glad to be here. I love you all to death. I don't hear music. I wonder what's going on. Maybe my thing is muted. I don't know. But anyways, what's up, chat? How's it going? Whatever happened to Tom? Tom is here. I think they switched the times around. I think Tom and Terry are together in the mornings earlier. I can switch everything around a little bit. How's it going? Wait, what was Methodical's trade? I heard at the end he was in some kind of trade. He was like, we don't get to see it play out. What was he doing? Good luck to you, sir. It's been a crazy day. I'm way up today. Again, I was 30 something K profit total across all the accounts. The live the $1 million challenge account's up to $367,000 right now, which is cool. Pushing towards, so today is account highs for the challenge. He's trying to get back to even. Was he shorting or was he was short? Okay. Well, good luck to him. I'm short now, so if that helps, I put a little selling pressure on the market. Maybe that helps it go his way. It's not the best place to short from. I'm still short-minded because of what we've seen the last couple of months. If the market wasn't rallying on good news, the market wasn't rallying on good earnings, market wasn't rallying anyway. Why is this Nvidia Microsoft deal that's pushing those stocks up? Is that going to save the market? I don't know. We have minutes today, so be careful. The minutes could hint at a possible future rate cut, but I'll tell you something. My thought this morning was maybe information leaked about the minutes, but I don't think so, because I go look at the CME Fed Watch. There's still only a 6% chance of a rate cut this time around. So I don't think people are pricing in like additional rate cuts. And if the minutes do hint at maybe a second rate cut or third rate cut this year, the market could respond very bullish to that and just basically just take off with another green candle to finish the day. It's why it's really dangerous shorting in this environment with all signs looking great. I made all my money today longing. Today was a long day. It was so easy to see the long out the door. All of Rocket Scooter indicators, nice and beautiful and long. Resilience positive, monthly resilience positive, arbitrage positive, 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 positive. Out the door. I made most of my money scalping from here to here, here to here, here to here. And then when that happened, I didn't do anything else. I just waited. I don't like to take every single move that makes, even though I look like, oh, I left some on the table or I missed out. And I made 30K today and missed out on nothing. So I'm happy. I'm happy with my performance. I'm happy that I didn't try to short out the door. I didn't get squeezed. I waited until now to start building a possible short because I don't believe we're out of, I don't think we're in the clear yet. I don't think we're in the clear yet. I think it's very possible, and I mean it. I think it's very possible, and it can happen, that whatever is done by the end of the day today, that this could finish up here and get worse. I think that's more than entirely possible. I'm not betting heavy on it, even though I could put like 20, 30, 40, 50 contracts on it. I got 4. 4 is small. Anything less than 10 is small for me. 4 is smaller than small. 4 is like very small. But that'll do a lot of the heavy lifting. If this just decides to pull all the way back and sell, I very rarely jump in and do this. You guys know me. I'm the kind of person that doesn't like to short markets, especially bull markets. And against bull confluences, the only thing that has me doing that is my thought that the market has not been bullish. And if today's the day that everybody says, just kidding, we're bullish again, then okay, then it's proven me wrong. And today's the day we're going to jump back into bull market. Fine. But other than that, I still believe there's not enough good news today to lift this higher. I'm going to fade it all the way back down to start. Is it possible? It could take 2 or 3 hours to get there, maybe. Now let's look at the greater thesis I had, which was what's going on with gold? What's going on with Bitcoin, right? These are the things that started squeezing people. How do they look today? Well, gold is rallying through the roof, and that's another reason why the market's relaxing as well. We had a big up in NVIDIA today. Went up and started trading back a little bit, but the pressure seems to be off now that gold is rallying so hard. The pressure seems to be off now that Bitcoin is no longer crashing as well. It's not trading up today, but it's trading like flat to sideways today. Nothing too crazy, but still over the last week, still kind of pushing lower. Not the best, I would say, for that case. But again, I'm still in the mindset of as long as Bitcoin is continuing to crash and sell off, you got all these people exposed to it. These big sell-off days we have will turn around to be the big days where everything gets squeezed elsewhere. And that's basically it. Now, like I said, I'm not really too sure about this today. Day's halfway over, but it's very possible that we are back to here, like literally back to here to finish the day at 24,900. That's 200 points away on NASDAQ. I'm totally fine with that. And if I get it, you know, it's not really that big of a deal. Was it $15,000 if it falls in 4? Not really that crazy. I'm not going to lose a lot. I'm not going to gain a lot. I'm up 18,006 in the million challenge account today. This is a live, this is a real money account, my own personal account. I've made a pretty decent run in all my prop accounts as well today, which is good. So I'm pretty happy. I have nothing to complain about, which is good. And that's it. Now we wait. And I'm not sure, like, again, my rules, I don't normally short out here. I normally will be sitting out here. So the fact that I'm going against like my greater judgment, which is just sit out, it's still very bullish. It may not fall. My greater thesis is like, go ahead and take the bet. But because I'm not very confident, it's so small, it doesn't even matter. I'm not going to make a lot if I'm right. I'm not going to lose a lot if I'm wrong. And that's okay. I just want to stick to the main thesis. If I'm looking for shorts to pop, or pops to short from since the last like 2 or 3 weeks. And I'm still not going to change my mind until something substantial changes in the market itself, which I don't know what that is going to be, because we've pretty much gone through every single major event, every major catalyst that's out there, and nothing has rescued the market. So I still think liquidity crisis is it. I don't think we're out of it yet. I don't think when the minutes comes out, the minutes are going to surprise us with anything extra bullish. So that's it. Guys, my question to you, long or short today from here? Is this a recovery? Did we just pull ourselves out of this crazy bear market? Monthly maps, repaired, DD ratio, 0.8. Wow. Resiliences, all in this 80s and 70s. Wow. It's bullish, bullish, bullish. And it's very strong bullish too. It's not just barely bullish, right? Everything turned out great. Another thing that happened today, which is to take note of, is VIX options. Monthly options for VIX expired this morning. Every time you roll into a new VIX month, sometimes the mindset changes. Like people that are hedged in monthly options, they may just be getting squeezed until the close. And then once the close is done, then the market moves. A lot of times you'll see once that pressure is off. An example is, say the world's, largest bet in, I don't know, NVIDIA, and you got like a ton of puts, like the market's going to crash, and your puts expire on a Friday. And that somebody is on the other side of that trade and don't want you to get paid out. So they're out there longing the underlying and longing the underlying. Every time it sells, they're buying the dip, they're accumulating it all just to keep from having to pay you out so much money. And then as soon as your options expire, then they dump it to the market and then it finally falls, right? You could see those kind of mechanics where the move doesn't happen until after major expiration. And this is today, right? We had VIX expire. We rolled into a new VIX futures contract. And then Friday, we have monthly expiration for equities. So that could be part of it. Another thing, guys, I'll let you know my magic number, which is called the contango backwardation midpoint. We call it triple B for short, is finally upon us. We have a new VIX futures contract. It is at 2017. If you guys are writing down Matt's magic number for VIX, you guys know the rules. Anytime VIX futures are trading above 2017, the market is going to overshoot pivots and be overly sensitive to news. Anytime it's below 2017 for the next month, it's a month-long pivot. The market's going to be relatively stable. It's going to bounce off of pivots very hard. It's going to hit a pivot and reject pretty clean. Today we're below triple B, and this morning, look how clean the pivots were. I was longing right on these dips every time I did 1, 2, 3. I was yelling and screaming I'm printing money like Jay Powell. I was having so much fun with it. I'd buy, I'd sell a minute later. I'd buy, I'd sell a minute later. I'd buy, I'd sell a minute later. I scraped together 60, 70 points like 3 times in a row and just milked it today, which is kind of fun. That was actually kind of nice. VIX futures trading. So VIX futures, there's a futures contract for the VIX, and that number there's a whole thing that goes with what that number actually represents. Futures contracts, as you know, you can trade futures contracts at different expirations. There's one right now for March. There's one for April. There's one for May. Pick which one. We usually trade the front month, right? Which currently right now is the H6 contract for S&P and NASDAQ as example, right? They expire quarterly, and you're going to get on VIX, they expire monthly. You can choose to trade the H contract. You can even switch to trade the M contract. I wouldn't recommend it until it's the current front month that we're in because it's illiquid, but you can. The market's pricing it differently, as a matter of fact. If I were to go to the M contract in NASDAQ, it wouldn't be 25,080. It might be much different. The different futures contracts are trying to price in the value of that thing at a point in the future. So an March contract is trying to price in where's the value of VIX going to be at the expiration of March. An April contract is going to be guessing what the volatility will be in April. So it's aiming for 2 points in time. And different things will be happening at those points in time. They're going to have different values today. So April may be much higher than March because maybe April might have some events coming up. Maybe Trump has a big meeting with China or something, and then volatility will be slightly higher that month than this month. And of course, the efficient market hypothesis states that all the information is priced in today. So that leads to an effect called contango and backwardation, where two contracts that represent the same underlying but different times are trading at different values. Contango is when the forward month, which just means the next month. Front month means current month, the one that hasn't expired yet, that's the nearest term expiration. Forward month means the next month after that. Two times forward month is 2 months after that, however you want to say it. But front month, forward month is now and next, right? So when the front month and forward month, if the forward month is above the front month, it's called contango. The forward month is below the front month, it's called backwardation. It's just the 2 words they came up with. Who knows what they even mean? Because, but that's the words they came up with. So those 2 effects can be exploited for pivots, which is what we use. That triple B is the midpoint between the contract's front month and forward month around expiration of the underlying options. It's a weird mouthful I just said there. But VIX options expired this morning, Wednesday morning, 3rd Wednesday of the month. And the futures contract that goes with the VIX rolled over last night. The Tuesday before is when we roll over. So that rollover event's very important because that's when there's a lot of position shuffling because the majority of these VIX options expire, right? So people are like determining, okay, what am I doing next month? People are making decisions a month at a time and rolling large amounts of money forward. And whether they're re-upping their VIX position, or maybe they're getting something stronger or less strong, whatever the case may be, a lot of exchange happens on that exact event. So that exact rollover in futures is very important to measure how much contango is there leading into the next month, because now you know if we're underpricing or overpricing the expected volatility, then once you roll out the next day and the stock market opens, you see where VIX really is relative to the current sort of like landscape of where that contango or backwardation is. So that midpoint that I give you, that number is so key to how you're going to trade. It tells you how to trade that month. It's part of my boot camp and is one of the best things that I've ever taught. And it's so profound. In fact, other people have asked me, hey, can I teach this to my Discord? And I'm like, sure. I love the fact that this concept is picked up by a lot of traders, because two things that you learn in day trading. Number one is you learn how to make money. And number two is you learn how to lose money, right? Mostly you learn how to lose money, right? So you get good at this. But what you don't learn are the mechanics of how to win money better and to lose money less bad. And one of the major components of day trading is adjusting for volatility. Now, one thing is for certain is that specific midpoint, when VIX is below it, we're going to call it like this mode here. When VIX is above it, we'll call it this mode here. When VIX is above that level, you're going to see that, say that you have a high volume pivot, a high volume node, whatever it is you're trading on, you're going to get to that level and sometimes undershoot it or sometimes chop around it before you go. It's really hard to trade like that because you don't know if the market is doing, let me pick a color that you can see better. If the market is doing this, oh crap, it broke through my pivot. Oh no, just kidding. It broke. Oh God, it broke through again. Okay, no, it didn't. You know, your trading is weird and it feels off. And when you're in this environment, this is almost guaranteed to happen. On the other side of the coin, when we overprice volatility and VIX is sinking, it's less susceptible to being impacted by news. And it's more rigid, like the market's more rigid. You're going to hit your pivot and just sit there and then move pretty quick. It's not going to overshoot or be volatile. We overprice volatility and volatility is quickly decaying. So the market makes quicker decisions and it's less susceptible to being impacted or like kicked around by the news. Case in point today, right? This is the first day the market felt bullish, even though it was chopping around a lot. Look how sharp it was bouncing off my bull zone pivot at 765 when I was longing every time. Longing, rally, longing, rally, longing, rally. And finally, the market gave up on capitulating today and rallied. Enhance. I love that. Super Dupers. Enhance. Okay, let me make it a little bigger here. So what you're going to do, the way you're going to trade, let me make this slightly bigger here, is in the environment when you're above it, anytime VIX is above it, treat yourself like the idea that you can overshoot your pivots. And so I build a position around the pivot. I enter before, right below it, and then right near my stop to really build a cost base in the volatility. I divide my position up into smaller chunks. If I want to take a bite of 3 contracts, 1L is 1, so 3 total, I spread it out so I can like average in around the pivot. In the environment where we're trading below that level on the triple B for VIX, then I will long pretty much at the pivot. I don't need to do much building. I'm all clustered here. I can trust that it'll bounce pretty smoothly. Another key fact is that when you are if you are in the above triple B realm, you're going to see that volume is sporadic because not everybody's really sort of participating. It's more volatile. We underprice volatility, and now we're rapidly going into it. So people's desire to play the market is more spread out and not uniform. So you're not going to see like volume really distributed well. Volume's going to be all over the place, which is what causes the choppiness. Everybody's like, I want a long here. No, I want a short here. No, I want a long here. No long higher. The short higher. But then here, everybody's like, I want a long here, long here, long here, long here, long, 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 long. I want a long here. Everybody wants to do the same thing at the same place. So it's uniform. The volume distribution is more of like a parabola, which is what you'd expect. It's almost like a bell curve, a very uniform distribution. It's much easier to trade when you can hunt down and track that volume being pinpointed in one spot. Does everybody understand what I'm saying? They just did the contest. Hopefully some of y'all are paying attention. In chat, Are you following what I'm saying? It's just two different modes of the market. This has nothing to do with where you enter, where you exit. This has to do with how you enter. How big is your trade? Do you spread your bet out or cluster in at the pivot? How confident are you in that you've overshot your pivot or that you actually broke it? Does that make sense? Okay. So in this environment, we are in the it's safe environment. You're going to bounce pretty solid off your pivots of very little overshoot. You can trust that when you break a pivot, it's probably breaking. You can see how once we get to the pivot, there's not a lot of resistance. It just sort of clustered and kept going. You see how when I hit my pivots, it's hugging them tight. It's not really hitting the green line and selling off and hitting the green line and selling off. It's not like it was yesterday, right? Yesterday was a completely different environment. You're hitting pivots, chopping around, hitting pivots, chopping around. You see when you hit your resistance pivots, all that chop that came with it, right? Today completely seems different. You can see a night and day difference. There's practically no chop. And that's exactly what you see when the market's a little more uniform, that environment. So an example is, say, pretend I want to be a bull today and I want to long. And I say, I would love to long right here. So the market falls and I wait for it and wait for it, wait for it. It probably would hit it and then support there pretty quickly. It would look almost exactly like that. In the other type of environment with VIX, it probably would do this and then this and then that and then this and then that and then this and then hold. There's a big difference between how your pivots behave in one environment versus the next. Because you have a lot of extra volatility, you have to account for that. Smaller position, wider stop, bigger position, smaller stop. And that's basically how you do it. And if you trade futures and you want to know the difference between maybe like me and you, you're like, man, I watch this guy trade every day. He pushes buttons, I push buttons. How is he making millions of dollars and how come I'm blowing up accounts every day? Like, I don't understand the difference. I mean, I'm long and he's long, and how are we making different amounts of money? What's the major difference? See, in trading, people don't understand what the major difference is between good, great, master, grandmaster. There's no like crystal ball I have where I can see something you don't. It all boils down to behavior. Is how you execute, how big you execute, how you manage your position is the major difference between me and you, and how you manage your emotions while you do that. I have an iron stomach, dude. I can hold through so much because I have so much confidence in my abilities. I don't get shaken pretty easily, right? I have a lot of money to trade with. A loss doesn't make me feel bad because I keep my losses small. You could do the same thing relative to your own income, to your own tolerances and stuff. Make sure you just keep yourself like guided that way. If you're like, what's the difference? Like, what is the edge that Matt has that I don't? If you want to say like, I want to get to the next level. If you've never adjusted your position or your positioning for volatility, you are missing out on a whole wealth of edge that pros will have that you don't have. It's as simple as knowing this thing I drew on my chart. Knowing what's possible to happen is the difference between you and me buying at the same place and you stopping here and me adding there. I broke even and made some. You took a loss and then decided to jump back in and take a second loss, right? So understanding how the market moves due to volatility is such a game changer, especially when you're trading props. Here's another rule of thumb. If you're struggling, especially if you're trading some of those props with trailing drawdown, or even the ones in MyFundedFutures that are like that. In trailing drawdown accounts, when you were above, let's do this. So let me make this one. This is the thicker one. I keep the history of them. That's why there's a bunch of them. But this one, this is this month. If VIX is above this level, you're going to get squeezed out of every trailing drawdown account you have. The market's going to be so choppy, you're going to bust. It's going to be hard to get a trade right. If you stick to just this environment to choose your days to trade to build your buffer, you're going to have the easiest time here more so than here. You're bouncing around and chopping around all your pivots up here. You're going to get chopped out and squeezed out a lot. Not the best. So I just want you guys to keep that in mind when you're learning trading, is that it's not just where you buy and where you exit, but how you buy is the difference between like like amateur and pro. That's not even a grandmaster level thing to understand the VIX. But most people learn trading and they just pick up a chart and look at the candles and start making decisions, and they think that's day trading. But you want a true edge, you better understand how the VIX plays and stuff, because it's going to manipulate how you get into your position, right? Your thought process needs to change. So hopefully that makes sense. And nobody can predict the market, but what you can predict is how the market's going to behave. That's how the market's going to get there. You can't predict up or down, but I can tell you if the market's going to go up, it's going to go up smooth and clean with no chop today. That environment. There's not going to be a lot of pullback. So I'm betting on the VIX turning around the other way. See how the market's not really selling off that hard. If this was yesterday or the day before, we'd be hitting these highs and just bleeding off for the rest of the day. Somebody said the chat is very distracting. Yeah, if you start, anybody that continues to post eyeball and mouth emojis and all that, I'm going to go ahead and ban you. So let's stop that. We're distracting people. Be nice. Don't be spammy. All right. So we understand the difference, right? If you want to add something to your arsenal and gives you edge, understand that number, that single number that I give you for VIX futures once a month. It's very easy to calculate. It's the halfway point between the two contracts at the moment of rollover. When's the moment of rollover? It's the Tuesday before monthly expiration on VIX options. Monthly expiration at VIX options happens on the third Wednesday every month, unless there's a holiday that Wednesday, then it moves to another week. So it's usually the Tuesday before the third Wednesday. Don't say the third Tuesday. It's the Tuesday before the third Wednesday, which sometimes is the second Tuesday, like in the event that the month starts on a Wednesday. So that Tuesday, all you do is you go to futures close, which was here, of the previous contract, February, and then you go to, wait a minute. Oh, I'm sorry. Here, my bad. I'm like, what's going on here? Here. This moment in time, you take the close of futures, and then you take the open of futures in March. So you see, like right there is where we close and where we open. That's where you do the measurement from the close of the previous contract in February to the open of the March contract on that Tuesday at the night when futures open. You just do the midpoint between the close and the open. There's the middle. That's it. And you will see that actual midpoint is actually, since VIX futures are a traded instrument, actually it's a high volume pivot. Every time you touch it, the market's going to react violently to it. There's going to be volume in the VIX itself. Look down here at the bottom. You guys can see that, right? Look at all this volume relative to what you were seeing. Like normally VIX futures are like 60, 70, 80 contracts a minute, and you get all this volume of like 500, 600, 1,000 at this exact pivot. It's very high volume. And so it becomes a pivot for the VIX, so that when you are kind of interacting with it, it is a launch point for the market to turn around and go different directions and stuff. So you're going to basically know that you need to modify your trading style based on what's going on there. And man, this is just kind of blowing me away that the market decided to turn super bullish today. I kept my position size relatively low up in this area, but I don't think we're going to get the sell-off from there. But I was looking for 28. And again, kind of the same boat. This is a different method since we're not that volatile. I am betting on a bigger resistance in the market here. So I engaged in a relatively small position here. So I can basically go in pretty heavy up here at the top if I get there. That's what I'm working on today. That's it. That's it. So we'll see what happens. We'll close it for 25,060. I 100% believe that. I think it's very possible. The opportunity is there. There's more opportunity to the downside than the upside. If we're going to the upside on a non-volatile short squeeze, then we're fine. We will inch higher hour by hour as time goes by. There's no, unless minutes come out, there's like a catalytic move that burps me up. I'm probably not going to take a big loss today. I'm up 18,000, 17,000, give or take in this account. just chilling. Is there liquidity in VIX futures? VIX futures itself, it's not that bad. Let's check it. I think VIX futures is extremely liquid. Hold on, let me pull up the VIX options, you mean? VIX futures are pretty liquid. Oh, you said futures, not options. Okay, well, the options themselves are for February 25th. So this is these are weekly Fridays. And so the open interest is not too terribly small, 12,000, 8,000 near the money. Not bad. This is moderately liquid, not too terrible. The volume traded today, thousands of these contracts near the money. But again, VIX doesn't move outside of this range. So for the entirety of VIX pricing, it's liquid. But for this range, it's relatively low volume because VIX isn't going to move more than 3 or 4 points per day. So, you're kind of locked into a range here. In that range, you're talking about 4,000 or 5,000 contracts being traded. It's not even close. Like SPX, you might have 30,000 contracts traded at the near money expiration. Is our expiration near the money? Yeah, look, SPX, 60,000 every 5 points. Like this is extremely liquid. VIX options, not super liquid. VIX futures, moderately liquid, but not too terribly liquid. It's definitely like much more liquid than a lot of like agricultural futures and stuff, but it's still not like really strong. You can see like minute by minute, every 5 minutes, you got like maybe 300 or 400 contracts being traded, which is decent enough for you to have a moderately sized bid-ask spread. It's not going to be crazy. If I go to the active trader on this, you can see that the market's pretty fat for VIX futures. There's no large spread. It's liquid enough for as little movement VIX has. That's why it's kind of clustered near this, because VIX isn't going to move very far, very fast, right? It's going to move 5 cents, and that's a huge move. So you're going to see that it's very padded. There's not a lot of volume relative to how much potential volume there is, but this is also there to like people are using this a lot to hedge their options exposure and stuff as well. VIX options is good for sellers. It does not move like the indices. Yeah, like VIX doesn't move. It doesn't trend like something like a stock would trend, right? VIX doesn't have potential to go higher. Left on its own, VIX will decay as the market becomes more liquid, which is always happening. So I hate when people are like trying to use like a Fibonacci or something. I'm going to buy the VIX at the 23.6. I'm like, all right, you do that, bro. VIX isn't trend. It's a measurement of like how turbulent the risk distribution is. And so when that turbulence goes up, VIX goes up. And then once the turbulence is over, VIX just comes down. VIX will continuously decay as the market is on a perpetual search for liquidity. Therefore, VIX is on a perpetual decay to zero. It just occasionally gets bumped up before it comes down. There's no upward trend in VIX. The only time VIX gains any kind of bullish traction is in moments of absolute panic in the market. I start my boot camp next March, probably like the end of the month. We're giving a whole other month from now. D-band ES reversal. Yeah, well, that's the play I was trying to do. Yeah, I'm just keeping it small, so I'm not even like putting too much on the table for it. I still have that greater belief that, you know, after minutes, the market may, tonight or tomorrow, the market's probably doomed still. Now, again, today, all signs are bullish. No signs are bearish. It's not the same as it was yesterday. The market decided to rescue itself today. So it's not the most smart. It's not the smartest thing to be shorting this. I know that. That's why I'm trading it small. I still have the greater belief that whatever catalysts we got coming in. Friday's a big news day, by the way. Friday, we got GDP. We got the S&P Global PMI numbers come out, services, composite, all that stuff. So Friday morning, we got two pretty decent news pieces. You know, the Fed was projecting really quick GDP growth for the year. And if that comes in as a miss, the market's going to hate hearing that. So don't sleep on that news event tomorrow. You might have to listen to the VIX Masterclass a couple times. all, like when you boil it down to one sentence, all it is a condition of where VIX futures is trading can tell you how you enter your position and how the market's going to move there. Yes. Hey, what's up, girl? What? What we got? Oh, yo, look at this, guys. I'm going to live another day. Look how healthy I'm eating. There's like a lot of green and red stuff in there. Wow, chicken fajita bowl. There's like chicken, cilantro, beans, avocados, cheese, and rice. It wouldn't be lunch money with Matt without having lunch with your money with Matt, which is what we're doing right now. There you go. Come on. Come here, buddy. Oh, he thinks he's getting food. Come here. Come here. He's being crazy because he thinks, watch, he's going to stare. He thinks he's getting food. No. Dude, your heart is racing. You're excited, bro. Bro, you're not going to get food today. Everybody say hello to Pickle, the official mascot of MyFundedTV. Our unofficial mascot. Look, he does this thing where he sits straight up. It's so weird, and he only does this right here in my chair when we're sitting here. He will like lean back and balance himself. Okay, now he's going to jump. Later. Pickle the dog. Sweet, man. I got some lunch now. But anyways, yeah, so understanding how VIX boiling down to one sentence is how you enter your position, how the market gets to where it's going. You can understand that when VIX is above that key level, you're just going to chop around your pivots. You need to understand how much that volatility is. I like to look at the candles, right? I look at a 1 minute candle. I try to find the largest 1 minute candle, and that tells me about what the volatility is going to be. And so if the largest 1 minute candle is 70 points in NASDAQ, then by as a rule of thumb, I allow myself up 70 points of overshoot. So if my normal stop is 40 points on NASDAQ, now I've got twice the distance it can overshoot. So because of that, I give myself half the position and size in for double the distance, right? So example is, if my normal, pretend that it's volatile, which is not, but pretend I went into long right here as an example. When VIX below triple B, then I give myself my normal 40 point stop and I'm out. I'm going to long 5 contracts. I'll put 5 there and I'll stop at 40. If we're above it, then I can assume I'm going to overshoot. I want 5 contracts still, but I notice that the 1 minute candle is an 80 point run. So because it's an 80 point run, I'm going to need an 80 point stop. But because I don't want to hold, because I'm going to have to hold for twice the distance to account for twice the possible overshoot, I need half the position to account for it. A lot of traders get trained very poorly into thinking about how many points they gain in NASDAQ. It's a guru thing, dude. So many fakers and frauds out there are like, go for 10 points, go for 20 points. They're not adjusting for volatility. I trade circles around them. There's a reason I do as well as I do. It's these greater understandings of how markets move. And you need to pick that up too. If you're going to have any chance in hell of doing this full time or doing this or beating the prop space, you're going to have to play with volatility. It's such an edge to have. So you understand that losing, people are like, if you lose, how can you be upside down 70 points? That doesn't even mean anything. It's a meaningless thing. All that matters is how much money you've lost relative to how much money you have. If you allow yourself 40 points of loss with 5 contracts, is the same thing as allowing 80 points of loss with 2.5, or allowing 160 points of loss with 1.25. It's the same loss to you. You're not bragging about how many points I got on NASDAQ. Who are you trying to impress? It's not how traders trade. You have to know when you're invalidated. And that VIX will tell you how you're invalidated. If 40 points is your limit to stop, because that's normally what I stop at, then I'm invalidated if it goes 41 points. Then I know I'm wrong. But if the average volatility is 80 points, then I'm only invalidated 80. I can't tell the difference between am I wrong or am I chopping? So that understanding your invalidation point is the most important part that separates the good from the great. The good will long here smaller and hold, and then long here again and get their cost basis here and know that they have a volatile range and hold through it and average into it and then get the play. The bad trader will long too big and then stop and then chase the long again and then stop again, and then chase the long again and then stop And then when it rallies, you go, oh, if I only would have had like 5 more minutes before I blew up, I would have made all this money. Why did it rally once I stopped out? It always rallies once you stop out. Because you're the trader that entered here and stopped and entered here and stopped, and you didn't know the difference between a breakout, an invalidation, or volatility. All right? Only I had like 5 more minutes, man. The minute it stopped me out, it totally went my way. What the heck? It's all most of you guys, right? Been there. Been there. Okay. The difference is knowing the environment in front of you. Not trying to say, I can predict the market. You're not predicting this. This is volatile. The volume is like all over the place. It's distributed weird. Volume is not going to be nice and clean. Traders are all over the place. I don't know. And so because of that, I just tell myself, all right, I'm going to draw a box where I'm going to allow that volatility to chop me around. Cool. I can long at the bottom, sell at the high, long at the bottom, sell at the higher. I can just long bigger, and stop out of all of it here. I want 5 contracts. Cool. Let me buy 1. Let me buy 2 there, and let me buy 2 more here. I get, in case it does bounce, then I made something with a small position. In case it falls through, well, I have 1/5 of my position holding a bigger drawdown. That's actually lesser of a loss because I accounted for volatility. If I'm allowing double the distance to move, I'm giving myself half the position. It's the same loss. So you're basically having that same effect. How much volatility you have is indirectly proportional to your position size. Volatility is 3 times as much as your normal stop, then trade 1/3 the size of your normal position and put the rest of it in near the bottom of that volatile range. That is literally the difference between you and me. How we handle that entry and how efficient we are at getting our cost basis around that pivot, knowing the difference between volatile and non-volatile. Today, not volatile at all. Today, we fell to bull zone pivot, and I longed and got out and longed and got out. And it was so crazy. I was going excited on stream. I couldn't long fast enough. I don't copy trade my accounts. So I was only able to get in like 2, like it would fall here and I'm like, long. I'm trying to click long across the board. And I couldn't even get into everything fast enough before it took off and I sold. Then it fell again and I tried again. I was able to get like $6,000 3 or 4 times in a row. But I would have loved to have been long in everything because it's non-volatile. It hits the pivot. My full position was here. Got out there, got in here, got out there. If it was a different condition of the VIX, you probably would have done this before it took off. This is the good sharp pivot condition. Yesterday and other days was the choppy condition. So it affects how big you trade and how you attack your entry as a professional level consideration. You might be like, screw this nerd, man. My fair value gaps do all the work for me. More power to you, bud. Don't care. But if you're like, I watch Matt. He wins trading competitions. He must be cheating in all of them. I don't know. Something's going on. Or I watch Matt. He's probably pretty good. What does he do that's different than me? That's one of the things I do that's different than you. Mickey Matt is crazy. My voice. That's the last time I'll ever do that. I was scaring myself with it. So part of what I do that you may not do that makes us different. If you're like, what does he do that's different than me? We're both long and we're both shorting. How's he making money and I'm not? You might be the kind of person who's I copy his trades. Please don't copy my trades, by the way. But you may do it in secret and be like, I'm going to copy his trades and not tell him. Well, fine, whatever. But we're not going to have the same performance because when we get to that level and we're chopping up and down, my heart is in a different place than yours. I'm not nervous. I'm not over positioning. This is the pivot. I'm all in. I'm like, ooh, there's volatility. Let me bet small and bet around it and then account for it. Whereas you are going to get in too big and you're going to get scared out and stop. That's a major difference. There's more trades that I don't lose because I do that. There's a lot more trades that I hang on even when you might think you're wrong. I'm not invalidated yet. The key takeaway from that lesson is invalidation. If you're going to write down a lesson from that, it's an invalidation. The higher the volatility, the further down your invalidation point is on any high volume pivot you have. You guys got that? Chat, are we good? Toss me some rockets or scooters or emojis in chat if y'all understand what I'm saying. Invalidation, it's the moment you are certain that you're wrong. You're 100% certain that you're wrong and you're pulling the plug no matter what. It's called invalidation. Your position has been invalidated. With higher volatility, your invalidation is further away than you think it is. So our invalidation point is different. You must account for volatility. I hope they clip this and make some clips out of it, because it is by far one of the most game-changing things you can do is understand the state of that volatility. And people have told me in my bootcamp that the volatility masterclass is the most abstract of all of it, because it's a whole different concept. I'm not teaching you like where to exit, where to enter, pivots, any of that stuff. I'm teaching you this understanding. And people have said it's like the most abstract thing, but it is the most useful thing I've ever taught. People have said that one consideration made their win rate go up 10 or 20%, just because they invalidated correctly. They started trading smaller, knowing that's volatile, so they can survive a lot more chop. You're trying to chase, breakout gaps and stuff, and you could be stuck in the chop. And imagine that you're sitting here on your 5-minute chart and the market does this and does that, and you're like, oh, here's a fair value gap. Let me long. Oh crap, it's sold off. Okay, I'm gonna sell. I'm gonna get out of the way. Oh, and went there again. Oh, well, let me chase the long again. Oh crap, I got out of the way. These kind of techniques only work if the market does this and keeps going, and you jump in late to the trade and it's actually trending. But you're not gonna be able to tell the difference between market trending and market chopping, because when volatility is high, it's impossible to tell the difference. You won't know, and I don't know. So I just account for the worst case scenario. I consider everything chop, and I just say, well, if I'm gonna long on the breakout and I normally gonna chase it with 5, it's volatile. Let me chase it with 1 instead of 5. And in case it dips, let me add 4 more, not stop out on the full 5. So what does that do? Okay, well, if it rallies and does this and I make money, I made money on 1 contract. It's not a lot, but at least I made something with low risk. But I have extra capital in case it falls the bottom of that chop range. I can add in my position at that spot before my invalidation point and then really grab the rally from a better dip. I make money if it goes up and keeps going. I make money if it goes up and dips and keeps going. I win in both cases before the invalidation point. Whereas you jumping all in will only win if it keeps going, and you will lose if you get into heavy and stop. This makes you lose. The difference between me and you is I don't lose on this play. If I've held through that, I was right. I was just early into heavy. You will lose and lose more. So getting your win rate higher means getting your loss rate smaller. A lot of times you're going to stop out because what you thought was invalidation was really just chop. Does this make sense, everybody? It is as simple as the magic number Matt gives you every single month, 20.17 on VIX futures March contract. If we are below it, this market is stable and bouncing rigid off of pivots. If somehow this gets above it, then at that moment in time, you're going to account for volatility. Use the bigger 1-minute candle rule to find out about how much overshoot you're going to allow. People tell me at times this is the best thing I've ever taught. It's universal. No matter what system you use, you better understand how the market's moving and where people's risk is. VIX tells it all to you in one bite. That's what makes it fantastic. And so I hope you guys gain something out of this. Makes me feel happy to bring y'all some good lessons, right? I like teaching, obviously. This is one of my bootcamp classes, by the way, that covers this topic. I feel like I described your morning today, taking along, getting stopped, taking along, getting stopped. The better you get at trading, the more used to you get buying when candles are red and selling when candles are green. Like a lot of times people are looking for green confirmation with a small red to jump in on. I'm almost always buying when the market looks like it's selling and everybody's like, oh my God, it's selling. I'm always getting in at those points. Sometimes I lose, sometimes I can lose big, but I get used to like right now, market's falling and a lot of people say, okay, finally, let me jump in on the short because it looks like it's coming down. I'm kind of green at this point because I kind of shorted at a higher spot. I get used to countering the trend I want and looking for better entries. That's another thing that probably makes the difference between what you and I are doing if you're newer to trading, is you see how the market's chopping around. And at the bottom of the range, I'm not red. At the bottom of the range, I'm green because I'm long from the top of the range or closer to the top of the range. This one, I'm actually longer closer to the middle, which I don't like, but I don't want to add any more risk to this either. I'm comfortable where I am. And so VIX is currently below the point which I'm referring to. So that's why the market was so clean. It's not really selling off that easily. The sell-off is not to do with volatility. I'm betting on a greater market, like, a greater market liquidity issue. that might actually be proven today to be over, that everything's straightened out today, which is kind of like, okay, wow, things might actually be better. But that's it. Matt's only like to have stomach iron, but I have better entries than you. Well, I mean, part of what you're crafting as a trader, your first 5 years, you're probably going to spend shuffling through different indicators. What's going to work? What's not going to work? And at the end of 5 years, you're not going to be any better of a trader if that's all you're doing. When you start to realize what does improve your skill is your execution style, how you enter, how much you enter, how you distribute your entries. You're not just jumping in at all your contracts in one bite. Stage in, right? Build around a pivot. And those things you do improve your skill set. You spend most of your time working on that. And that's where you really can get better at how you get in. It could be the difference of me getting in at 25,100 and you getting in at 25,080 that I won and you didn't. Because right now, as the market's chopping around, you could be sweating for this whole last hour. Think about it like this. Pretend that I shorted here. Let's just do an example. My short could have been a little bit better, but I don't want to put any more risk on the table. Pretend that I shorted here and you shorted here. Okay, this is me, number one. This is you, number two. Throughout this entire, 2-hour period, you spent most of the time in a panic. You're worried. You're upside down. You're stressed. Your heart rate is up. I spent most of the time comfortable. When it comes time for the market to finally act, we're going to act differently at the moment of breakout because we're both in a different mindset. You've been punched in the face for the last 2 hours. I've been mostly green for the last 2 hours. So when I look at it, you said you're number two. That sounds about right. Entry efficiency helps the emotional, helps your emotions. Imagine you're chopping around a pivot, right? Say that you wanted to long up this yellow pivot and it's chopping around here, right? And it's doing this. And then it finally takes off. So at this moment in time, say that it did this and then you decided to long right there and then it spends the next hour or two down in here. You're going to start to feel uncomfortable and more likely to pull the plug before it goes out. But if you're the person that longed here, you spend most of the money in the green or most of the time in the green or in the money, and you're not as nervous to hold through the chop than somebody bought at the top. Your efficiency of building your position as close to the invalidation point as possible allows you to spend more time in the trade, feeling comfortable while in it without feeling the pressure that you're losing. Your mind can play tricks on you when you're holding through volatility and you have a bad entry. You know what I mean? You might just lose your patience. You're like, you know what? I'm just tired of this. I just want to get out. I'm tired of holding this. Well, why? You've been upside down for 2 hours and it's just kind of like hurting your pride and you're just done with it. Okay. Well, maybe you're upside down for 2 hours because you got in too heavy, too early at the wrong spot. You know what I mean? So that's hopefully a good lesson for you. I like to teach y'all something good. All right, so I'm just holding 4 contracts. I'm not going to cry on this one. I'm up 19K for the day, and it looks like it's finally starting to pull back. My short was to bet on a greater resistance from 69.28 on S&P, but because I was getting in at the undershoot and at the pivot, and I was going to build around here, I just got in a small Nasdaq position by proxy, such that maybe with Nasdaq we can close down in here to finish off the day. Yeah, as Liquidity said, Liquidity says, until price invalidates your trade, the trade is still alive. That's 100%. And this whole volatility lessons to teach you how to properly invalidate a trade. It's one of the strongest lessons you can ever have in trading is how do I know when I'm wrong? You know when you're right because your account just goes green. You're like, oh, I'm right, I'm making money. But how do you know when you're wrong? How wrong is wrong, right? And that's really the takeaway. VIX is by far the most useful instrument for me for knowing when I'm wrong, apart from my confluences. The confluences are the most, your market internals are probably the most important thing to know that you're wrong. Like resiliences and arbitrage, the indicators I use that tell me, nope, the stocks are selling off, get out of your long in the futures. Okay. So that is probably the strongest. But also when I'm in a trade, how do I know if it's going against me sooner rather than later or just chopping at the pivot? VIX will help you out with that because the stocks themselves may be chopping at the pivot. You may not have a clean invalidation signal from your stock internals, your market internals. So anyways, well, you guys, I'm going to tell you, yesterday, inaugural, first day of our afternoon streamer and our evening streamer taking off. It was magical, man. If you guys didn't stop by and get to know Neon in the afternoon, come by in about 7 minutes. He'll be live on my channel Neon's fantastic, man. He crushed it yesterday. In the evening, I know a lot of you guys are probably watching Stephen K, but Stephen K comes on an hour after Brad starts on our stream. So you jump in at 7 o'clock. Brad will be live. Sir Darb, dude, so many good words of wisdom. He's such a cool guy. You guys will love him too. Y'all come check it out. Like I said, I don't stream in the afternoons anymore. For finally, after all this time doing it, I'm finally retiring in the afternoons and passing the torch on to my 2 new broskies on the Rockskier family. Click that link. Abby's posting something, following the host of Matt on YouTube on the link tree. Oh, thank you for posting that. Let me give you the link for the stream. So I'll be live, or sorry, I won't be live. I got to get used to not saying that. Neon will be live. Here's the link for that on my channel. I'll be in the channel hanging out with you guys, talking to y'all, chilling. But as an audience member, I get to be a trading DJ just like the rest of you guys, which is so different for me. For the first time in my life yesterday, during a trading session, I'm in my own community as a member, and I had so much fun listening to other people talk, hanging out with other people, learning from other people. That was kind of cool. So feel free to support our new family members. They've been crushing it. It's been so much fun. You're going to learn a lot, just like here. They're both trained by me, by the way. So they both know all the stuff that I know, and they both have their own perspective on markets. Neon has some really cool indicators that I've never even looked at, that I have seriously been considering kind of integrating, because he's got this really cool concept. I'll let him explain it. So y'all come to the channel and ask him about it. His stuff is pretty unique. He has his own algorithm and everything that he adds with Rocket Scooter. That's it, guys. We got 5 more minutes here till we chill. Like, my 4 contracts are putting some money in my pocket, but like I'm saying, I'm not super excited about this play. I don't have any confluence that the market's going to sell off. I could probably just be happy enough closing this with $19,000 and just call it a day. I have really no desire to, take too much risk. But I don't know. Maybe I'll just hodl till the end of the day. We'll see what happens. If it sells off, the opportunity is big. If the markets decide to turn around and sell, the Nasdaq can end back up where it started today. I've been kind of watching to see if VIX is going to go up. We're currently below the contango midpoint, which is fine. But gold has hit a resistance at 25, which is the major gold resistance. It's the midpoint of the big sell-off. Gold's still sitting at that same midpoint. It's bounced off of 2 times already. And now it's like, here's 1 time and 2, well, actually 3 times. The question is, are we going to continue up from here or not? That's the real question. NVIDIA has pretty much given back most of its gains from this morning and pulling back a little bit. And Bitcoin is finally starting to kind of like edge down a little bit for the day. So the question becomes, how do we close out? And I'm not gonna lie to you guys. I'm not bullish this market still, even though we've broken the bull territory. I'm almost fairly convinced that we can end up all the way back down to 24,950 and some change, all the way back down to here by the end of the day, like a full-on flush. That's why I'm engaged in it. So we'll see. We'll see if I'm right. Good luck to me. Good luck to Methodical, because I know he was short too. My brother over there holding that short. Hopefully he didn't stop out, and maybe he gets a run on that too. That'd be nice, because if it falls quick. Come on, baby. Give me that money. Give me that money. Come on, more red, more red. Let's see it. Give me that red. No green. No green candle. No wicks. No, I don't want to see it. Stay red. Stay red, you 1-minute candle. Give me that money, 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 money. Come on. Red only, red only, red only. Be nice to hit the green target there. My chat, somebody said, goodbye, Santosh. We'll see you tomorrow, or see you in the afternoon if you come by the stream. And everybody, yeah, if y'all don't mind, come by and support. At least just drop by and say hey. We have a giveaway going right out the door. As soon as we launch live, we're doing a giveaway. So stay tuned for that. Oh, did y'all see my Valentine's Day gift from iDoc? Check it out. I got a loot box. On you Arc Raiders players here. I keep looking in here for like ammo and grenades. But I got myself an oak loot box. It's like to store our stuff in it, but look at this. Adventure awaits. It's got a compass on it. It smells really nice too. And there's like a lock and key in it. We're gonna put all our little trinkets and like stuff from our trips and whatever, like a little memory box, right? I'm digging in it to see if I find an anvil blueprint. Somebody said sex toys. No, that's too fancy for that. Just throw those in the drawer. Come on. Memory box. Yeah, that's a really nice, a very thoughtful gift. I love it. Need to sleep. See you tomorrow. Yep. And with that being said, we got about a minute left and I got to go, but join me on my channel, you guys. Put your trading journal in there. There you go. That's really nice. With that being said, I do got to go. Don't forget, you guys, they have the really awesome deals going on for the Flex plan here. Before you get out of here, let me give you guys a little bit of info on that. It is the 20% off. Oh, actually 20% off Rapid's going on right now. Use your favorite affiliate code for that. 20% off Rapid. New users can get 25K Flex plans for $49 the first time you've ever done it. You guys probably all used it before, but if not, sub $50. It's really cool for an account, and the Flex plans are just really awesome. Existing users are $77, which is great. As you guys know, I'll probably hear about it all morning, but don't forget to check that out. All right, so I'll see y'all later. I'm out. Catch us later. Catch me out on stream in a minute. I'll be there in chat, hanging out with y'all, and hopefully riding the short back down the bottom. Wish me luck, and I'll see you later tomorrow. Bye-bye, guys.